Boom! What is up, everyone? We are live. Happy Wednesday. Happy hump day. I don't know what else to say besides the fact that this week the markets have been crazy. I mean, volatility has been the name of the game so far in 2022. Looking forward to more volatility today. We've got Jerome Powell speaking this afternoon at 2:30 p.m. We'll be streaming that here on the Benzinga channel. But before that, we've got a packed show today. I've got a special guest, Kevin Vandenbos. How we doing?
Hey, great. Yeah, I was just here talking real estate, and
now we're switching over to racing.
Yeah, Aaron, he said Michael Andretti, and I said, all right, well, I'm not getting off my seat. I'm going to just stick around for this.
Yeah, Kevin's a big fan. So good teaser there. Here in a couple minutes, we are going to bring on Michael Andretti, of course, the famous racer, and Bill Sandbrook from a SPAC they are announcing. So real excited to get Michael on the show, talk about that SPAC, the Andretti Acquisition Group. Kevin, I can't believe it. We're bringing the real star power on the show today.
I know, this is great.
All right. Well, without further ado,
this is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a breaking news.
All right. Let's go ahead, bring Michael and Bill on the show. We're going to get all the details about the Andretti Acquisition Corp. Of course, a brand new SPAC going public, so excited about this. Rohan. Bill Sandbrook, Michael Andretti, welcome to Benzinga Live. How are you guys doing today?
Hey, doing great, thanks.
Doing great.
First of all, I just wanted to thank you guys for taking time out of your busy Wednesday. I understand it's a busy week, busy couple of weeks for y'all, so thank you for taking time to join us today.
No, pleasure.
Great. Glad to be here.
So before we get started, can you just walk us through the Andretti Acquisition Corp, kind of how this idea started, what drove that idea, and kind of the goal behind the SPAC?
Yeah, sure. About a year and a half ago, I was looking at, SPACs were going crazy, and I started to look at, what can we bring to it? I felt that we can bring some things that other people can't bring to it. And, number one was our brand, but also was our knowledge of the EV space, the sustainability space. We are involved in Formula E and Formula Extreme, which are two electric series. We've been involved with Formula E since the beginning. Back in about 8 years ago. So we really know the space well as contacts. We have a lot of contacts in the space and also, outside the space. We have a lot of sponsors that, may be able to be a good tool to help, whatever acquisition we have, with whatever product we have that may be a tool that we could use to, enhance the sales. So there's a lot of things that I think I thought that we could bring to the party. So, the first person I called was Bill Sandbrook, who we grew up next to each other. We've known each other for 50 years and over 50 years, actually. And he's very he has a lot of experience in the public space. He ran a public company for many years and he's done a lot of acquisitions. So I thought he would be the perfect guy that we could bring in, and also a guy that I know I could trust to really protect our brand, because protecting our brand is the number one thing that we must do, because we cannot afford to have something fail. So, I think we did a great job. I think we brought in a great team. He brought in some people, and we put together a great board as well, board of directors. So I think we put together a great team, and really excited about it.
I'm glad you brought that up, because my next question was going to be, how did you and Bill meet? So I'm curious kind of how that's been, being in business with someone that you've known for so long. You mentioned, obviously there's a lot of trust there. What's that process been like?
Well, it's been great because, we've done some business together in the past. His company, U.S. Concrete, sponsored my son's IndyCar team for quite a few years. And then also Bill became a partner in our Formula Extreme team with me and Zach Brown, who's actually on our board as well, who's the CEO of McLaren Racing. So, Yeah, so we've done things, in the past business wise together and our partners already. So, this was something that just made a lot of sense.
All right, I'm going to go ahead and jump in here. Let's talk a little bit more. First, I want to give, for anybody that doesn't know, this is Michael Andretti here that won the PPG IndyCar World Series in '91, has tallied over 42 race wins. I mean, that alone is definitely something a feat to accomplish. Let's get into the targeted sectors here. So I have an image here that we're looking at. So when we look at the targeted sector here for the acquisition corp, we can include luxury, performance, racing, disruptive technologies, electrification, auto service, retail, and auto aftermarket. With a total $3 trillion market, a TAM here, how are you guys going to attack this process of finding the potential deals? I'll throw this one to Bill.
Yeah, I'll jump in. Before we IPO'd a week or two ago, right after we filed the S1, we had almost 40 inbound inquiries of interest in the SPAC that wanted to talk to us. And subsequent, we've had a number of more approaches this week. So we probably have 45 target companies in all of these sectors that you see here. So right now we're going through the vetting process. We're using our financial investment bankers to help us. The board will be part of that process, and I'll talk about that in a little bit. But we're starting to parse it down now, and it could be pre-revenue, it can be post-revenue. There may be EBITDA, might be future EBITDA. I think right now those are a little riskier, but the returns are higher. So, and we're going to look at some established companies as well that are currently private. But we have a very, very fertile target list right now developed already.
Of course. So I have to ask the question, why a SPAC and who is on this experienced board?
Yeah. Well, SPAC is just an alternative way to take a company public, and there's many benefits outside the typical IPO route. So, and that's why they were so hot in the recent, let's say, last 2 years. Well, they've been around for a number of years. Now, the board that we have behind us, well, let me talk about our CFO first. Our CFO is a former CFO of mine at U.S. Concrete, Matt Brown, and he and I guess we accomplished about 20 plus acquisitions together during his tenure. And I had done about 35 there and well over 100 over my career, because the whole goal here is to find one good acquisition. And with Matt and my experience of doing 5 or 6 a year while running a public company, we think this is a very obtainable task. Now, the board, as Michael said, we have Zach Brown, who is the current CEO of McLaren Racing, and also the star of the Netflix Formula One series. So people worldwide know him. Then we have Jim Keys. Jim is the former CEO of Blockbuster Video, the former global COO and president of 7-Eleven, and the current chairman of the board of Wild Oats Marketplace. So he brings a lot of consumer marketing expertise to our team. Then we have Cassandra Lee. She's the chief audit officer or chief audit executive at AT&T. She runs our audit committee. And then we have Jerry Putnam. Jerry, for those of you that might remember, was the former COO of the New York Stock Exchange, and he brings great capital markets experience to us. And then we have John Romanelli. John is a former Bear Stearns and Credit Suisse deal maker, and he brings an investment banking and deal making experience to us. And also we have Michael's father, not on the board, but as a special advisor, and Mario Andretti. He won 111 races, has won IndyCar races in 4 decades, and the only person to ever have won the Formula One World Championship, the Daytona 500, and the Indianapolis 500. And one final point on the Andrettis is, as Michael said, their connections span over 50 years of interconnectivity in the racing, automotive, and mobility technology space. Hundreds of sponsors have sponsored Andretti teams, Michael, Mario, his son, his cousin. And that network will be tapped on by us to vet targets, to help the eventual de-SPAC company gain business with those companies. They might be a source of strategic capital outside the traditional pipe market. So that the connections that the Andrettis bring to this venture, it far exceeds what any other, let's say, celebrity SPAC sponsor could bring to a SPAC.
Got it. So I'm curious about some of the disruptive technologies. As our audience of retail investors, we have a lot of them are very interested in the EV space, in the autonomous driving space. Has there been any interest in Lidar technology companies? We've seen a lot of self-driving companies go public via SPAC over the last couple of years. Is Lidar technology or anything in that space kind of interest right now?
Yeah, we'll be looking at Lidar. Lidar got a little bit crowded. There's a number of companies out there. A lot have gone through the SPAC process. We will look, but we're trying to find something more unique, a company that's filling an unmet need, that's a niche type business and be a first adopter per se. I'm not going to discount Lidar, but there's other things that might be more interested in less crowded space, because we do want to be differentiated. The whole goal here is to take a company public, help it with the Andretti brand, the Andretti network, the Andretti technologies on early adoption of racing type technologies in the EV space, and then make that company extremely valuable to its investors.
Yeah, excellent. That actually leads into the question that I have. So with the synergy of the acquisition, and how will this add value back to the Andretti brand, and how can the Andretti brand bring value to the new company?
Well, let's start with the second part of the question. The Andretti name is known or recognized by 75% of Americans. And it's one of the most well-known, or the most well-known worldwide racing brand. So right now, Michael has probably about 100 sponsors of his racing team. They pay Michael to be associated with the Andretti name, and to be associated with Andretti Autosports, and to be associated with Michael and Mario Andretti. They are paying to be on his cars. He doesn't have to pay them to be on his cars. They pay him. So the proof's in the pudding there that the brand has value. Now, as far as what the Andrettis can get out of it, well, let's say we might go to SPAC number 2 after this one's completed. We might be serial SPAC issuers if this one's very successful. Our goal is to make this one successful first, and I think anything that's associated with the Andretti name is going to be a winner, and it increases Andretti's brand value too, to have a winning business venture like this.
All right, let's go ahead. Let's keep going in here. So I have some photos that I'm going to be putting up here in the background, but I want to shoot a question here to Michael. So how do you feel that the success of Andretti Autosports, a team that has won 4 IndyCar Series championship and led his team to 200 race wins, how is those successes that you've gone through now, Michael, how is that going to play into and translate into this next business?
Well, I think there could be a lot of things that the team brings to the party. I think it's another tool as well. We have a lot of expertise in the sustainability space. We're constantly developing new things, new technologies, and especially in Formula E, there's new technologies coming out all the time, which we will be able to vet some of those things out before they even hit mainstream. So I think there's things like that we bring, as well as, depending on what product it is, maybe the racing can even be a test bed for the product, So there's so many different ways that the team could be involved to help.
All right,
Michael, so as one of the founding members of Formula E, how do you see the move into sustainability, into racing? I mean, race cars and sustainability usually aren't a lot of times in the same sentence. Could we potentially be looking at alternative fueling down the road as a company target?
Alternative what? Sorry?
Alternative fueling.
Yeah, I mean, for sure. Maybe it's not even electric. Maybe it's hydrogen or some other type of biofuel that is good for the environment. So, I think racing is going to be that way. I don't think you're going to see gasoline being used much longer in the cars. I think there's going to be some sort of alternative fuel. If it's not electric, it could be hydrogen like I said, or some sort of biofuel for sure.
I'd imagine that would have a lot of pushback from certain fans, to see race cars be powered by something other than gasoline. But I want to ask like a couple more general questions about racing. We've seen an increase in interest in the United States for F1, for IndyCar over the last few years. Is this in your mind, Michael, attributed to the Netflix series, or was the interest growing before that series came out?
Well, for sure, for Formula One, the Netflix series did wonders for that here in the U.S. No question about it. IndyCar racing's been steadily going upward. I think that they're a little different the reason why people are watching them. But I think Formula One for sure, Netflix and IndyCar, I think it's just because it's a great series and it's just creating more and more interest. I think the racing is probably some of the best in the world.
All right, I'm going to see if we've got any good questions in the chat. I've got my buddy Kevin here. He's a big fan, Michael. I think he's got a couple questions for you.
Great.
Oh, yeah, it's an honor to be here to get to speak with you.
Thank you.
I'm just curious, with Formula E, that's really cool. That's a really neat innovation in racing. I think that helps, obviously I think capture, you need, keep bringing in new fans, of course. How is that, trending? I mean, in popularity, I mean, is that, how is that gaining traction right now?
It's gaining a lot of traction worldwide. Because our cars are very quiet, we're able to race in places that you never thought there could be races, in downtown cities, Paris, your downtown, London, New York. These are places that with the normal race car with the noise, you wouldn't be able to have those events. So it's very unique in that way. So it's been a great way to get out the sustainability message as well, taking it right downtown of these great cities worldwide. So, I think it's definitely going in the right direction. I think it's gaining traction all around the world. And I think it's created a lot of new fans as well. There's a lot of fans out there that are really following the series just because of what it's doing for the environment.
That makes a lot of sense. That's really cool. My last question, I guess, what kind of racing are you still doing? I mean, I can't imagine you just totally gave up the thrill. You getting behind the wheel of anything anymore?
No, no. I haven't been behind a race car since I think my last race was 07. No, I haven't. Too busy on everything else and not in racing shape. So if I got in a race car now, I'd be really upset at myself because I probably couldn't even make it a lap without falling out of seat. So.
All right. Fair enough.
Of course, one thing I'd say, you're probably racing towards this company right now. So
right.
Definitely
that's our race. It's a different type of race.
Different type of race, but you got the experience, and that's what matters there. So definitely
right.
we're expecting a race win, a podium. I'll be looking for it.
Oh, yeah, we're looking for the win.
Yep, that's what I want to hear, guys. Of course, the ticker is here, WNNR. You guys can check it out. It's also trading on warrants. Of course, go ahead and check that out. We got Bill Sandbrook here, Michael Andretti from the Andretti Acquisition Corp. If you guys got a question, throw it on up. I know AB has one that he wants to go ahead and hit. I'll shoot to AB.
Yeah, this one's probably more for Michael, but Bill, feel free to hop in. If I'm just going out, go-kart racing with my buddies or something, what's one piece of advice you have for me?
Oh, I don't know. It depends. Are you serious or are you looking at it to be,
I want to win.
thing?
I'm serious about winning, but we're not serious about we'll go to the go-karts like once or twice a year maybe.
Oh, yeah. Well, yeah, I don't know. So you're just going to have fun then, right?
Yeah, but I still want to win.
If you're only going twice a year, well, it depends on who you're racing. If you're racing guys that race every day, you might have a little bit of a problem. So I think, racing, you have to, it's all about putting miles on, being in the car all the time, learning the technical side of it, what makes a car go fast, even a go-kart as well, So, it's not something, if you're going to get in and you want to be competitive, you can't just do it, halfway. You have to, totally put every ounce of effort into it.
All right, maybe the next time I go, I'll just watch some of your highlight videos, and that will get me
There
the
you
right
go.
mood.
Yeah, okay. Yeah,
Bill, I'm curious about your opinions on Michael's accomplishments as a businessman.
Oh, I think he's one of the most accomplished businessmen in the history of his sport. I mean, I put him, Roger Penske's been very successful, but I don't think Roger won 42 car races. So as far as a champion, an IndyCar champion, well, Michael's put together with all of his teams, Extreme E, Formula E, IndyCar, Indy Lights, and Michael, I know there's other ones that you participate in. And to be able to, I think he has 170 employees right now in Andretti Autosports and Andretti Technologies. He owns over 100 gas stations in California that are experimenting in hydrogen fueling for commercial vehicles and passenger vehicles. So he's not only a very successful businessman in a pretty difficult business, but he's on the cutting edge of technological advancement within the mobility space as well. So I think he's super.
I just got a last question. I know it's not included in the target sectors here, but one thing that I'm just thinking, and I can put it forward, the Andretti brand, has a lot of touching in plenty of different leagues and racing. Well, why not maybe some sports media here?
Well, we have
there you go. I got a little smile out there.
We do have some inbound approaches from those type of,
we'll call them perspectives,
and from some data analytic companies that are doing high-end data analytics for racing and mobility. So we actually put out a broad net there to encompass those, but we have had some interest.
We'll see what happens, right? There you guys have it. All right, guys, this was Bill Sandbrook and Michael Andretti here from Andretti Acquisition Corp. You guys check out the ticker. The ticker is, of course, WNNR, and we'll have you guys back when we get the company, right?
All right.
Good.
Got it. Sure, man.
All right,
Appreciate
guys.
it. Thank you, guys.
Thank you guys again.
Thank you.
All right.
Thank you.
Thank you. Been great.
All right, guys, that was Bill Sandbrook and Michael Andretti of the Andretti Acquisition Corp. Of course, the ticker WNNR. Go check that out. That's super exciting. I don't know if we've ever had a bigger guest on this show, honestly, than Michael Andretti. I mean, absolute racing legend. Glad we had Mitch and Kevin able to join us. Let me go ahead and bring my buddy Spencer on. Spencer, how we doing?
Wait, am I on?
Yeah, you're on.
Oh, what's up? Guys, fantastic job. Kevin, I can tell you're a little nervous there. I could tell. Kevin,
Oh yeah, I'm like starstruck there.
Yeah, Kevin. It wasn't a plan for Kevin to be on with this interview. I just mentioned to him offhandedly. Oh, we're having Michael Andretti come on, and Kevin said, "Oh, I'm a big fan." I said, "Okay, hang out with us. This will probably be one of your only chances to get to speak to Michael."
Yeah.
Who knows?
Well,
Who knows?
I did not get to hear the answer to the question when you asked Bill what his assessment of Michael's business acumen was. But I thought that was a funny question.
Yeah, well, because we think about Bill being the businessman and
Right.
Michael being the sports guy, the racer. But really, Michael is an accomplished businessman in himself. So I was curious from Bill's standpoint, who has been the CEO of a public company, kind of what he thought of, Michael's adventures into the business space. And that's something we're seeing more and more these days is athletes getting into business. And it's not all the time, even after their career. We're seeing more athletes get into business ventures while they're still in the league, whether it's Kevin Durant and his venture capital firm or Tom Brady and FTX. These guys are making moves. I think they're seeing that, hey, look, we have a platform, we have some money, we have bigger things we can do outside of just our sport.
Yeah. The days of just being like a name, like a sponsor a product or like endorse a product and like being a name attached to commercial, I think those days are likely over, right? Like for athletes and celebrities, they want to be more involved.
All right, guys. Well, that was fun. Let us know, if you guys have any feedback on the interview. Hopefully, we'll get Bill and Michael on again soon. Anytime they have updates with the company, we'd love to have them back on.
And any more celebrities you want us to have? Any athletes you want us to have, drop it in the chat. I'm just curious. I mean,
Paris Hilton's been talking a lot about NFTs. Maybe we get Paris Hilton on.
She was on a talk show. She gave out NFTs to the audience.
I think it was Fallon.
I kind of feel
her
like
and Fallon both bought like a crypto. If I was a holder of one of those NFTs, I wouldn't feel great about that. And like at that point, it's not cool. Once it's like on Jimmy Fallon and like everyone's parents are watching it, it like goes from it becomes not cool.
I would just say like Paris Hilton is low key like a fantastic businesswoman.
Oh,
She's
100%.
She's amazing. But you're right. The
100%.
fact that it's on Fallon is no dice. Sorry. But
Yeah, it's like once like Dogecoin goes on SNL, it's like all right, this joke has been played out.
Yeah. All right. I want to get to it. So here, I want to get to the chat. I want to get to the rest of our show. We got a lot coming up here. We're gonna have an in-studio guest. We're gonna have Casey Hubris from Rocket Mortgage. He's their chief marketing officer. If you've been watching this show for the past week or so, you've seen the QR code on the top right-hand corner. There it is right now. We're talking Super Bowl squares with Casey Hubris. That'll be at 12:30. I'm very excited for a 1 o'clock guest. You guys follow SentimenTrader on Twitter at SentimenTrader?
I do.
He's an amazing follow. I say they're a firm. SentimenTrader is with 1T. We're going to have Dean Christians on it at 1 o'clock. He's an analyst at SentimenTrader. So that'll be they got some great insights on the market. We'll have Jesse Kaylor on at the end of the 1 o'clock hour.
Keith wants Josh Brown on. We could probably do that. We can swing that.
Keith, we can arrange that. The problem with Josh Brown is he's often on CNBC at the same time that we're on this show. So we'd have to figure out a workaround there. But we can arrange Josh Brown.
All right. So what else, Kevin? Anything on your radar for today?
Kevin's just chilling.
I'm just chilling. Yeah, I'm not usually in the office. It's kind of a special occasion today, so I'm just gonna be here.
If you guys didn't check out, I guess my take was completely wrong. Chris Kaji saying Bored Apes have doubled since the. All right, fair. Hand up, I was wrong on that. If you guys didn't catch Kevin about an hour ago on the List Maker show, we had a great show on alternative investments. I'll drop the link in the chat that you guys should check out if you weren't watching live while that was going on. Definitely. Kevin, it's great to have you in office, in studio. Kevin made a trek from Lansing, right? So about an hour and a half.
Yeah, about that.
Nice.
Yeah, it was nice and early, -6 degrees when I left the house.
Oh my God, yeah, it was. I did the weather app check this morning where it tells you it's like 4 degrees, but then it says it feels like it's like -5.
Yeah, I had that this morning.
Yeah,
it's no fun.
I was in my car, dude. It took I was literally in my car for like 15 minutes before it finally warmed up.
Oh, by that point, wait, do you sit in your car or do you just go?
I just go.
Yeah, okay, that's an normal.
I'm saying I was like on the highway, and usually once you're on the highway, it heats up a little bit faster. But then still mainly it was like the steering wheel itself was still like freezing cold. I think I need some like driving gloves.
You guys seen that meme? I think it's the air hurts my face. Why do I live somewhere where the air hurts my face?
No, I don't think I have. Actually.
I will say, politics aside, I love like wearing a mask on my face in the cold outside. Like,
what?
It keeps my face warm.
Like a ski mask?
No, like a COVID mask, like a surgical mask. Like when you're walking outside with one of those masks on, my face is warmer than it would be if I didn't have the mask on. So I feel like I'll get these like dirty looks. People are like, "Why are you wearing a mask outside, like walking alone?" And it's like, because my face is warm. I like it.
That's a fair take.
Yeah,
the other fair
life hack.
The other fair take is that you don't have to cover your mouth when you sneeze if you're wearing a mask. So,
I hate that because I always like exude like stuff and then it gets stuck in the mask and it's gross.
Oh, well, that's a problem. Yeah. All right.
My sneezes are very rarely like dry. But enough of that. Let's talk about the markets for a second. So yesterday, we've had volatility has been the name of the game all 2022. I mean, it seems like every day the markets are up 2%. The next day they're down 3%. And the day after that, they're up 3%. Then it's down. Of course, on Monday, we saw all this movement within the day where the S&P 500 was down 4%. Midday finished in the green, kind of a historic move, right? We looked back, and that has only happened about 8 or 9 times in market history. The previous time before that wasn't since 2008. November of 2008 was the last time we saw a move like that in one day in the market. So if you're out there trading, I mean, this volatility has just been it's been fun. It's been crazy. It's less fun if you're just a long-term investor. You're seeing some of your holdings down that much and up, whatever. But if you're trading in and out, I mean, these markets have been great for that.
Look at all the green on the screen right there. The top of the screen, that top row says it all. Microsoft, right?
So let's talk about, Spencer, the my trades yesterday. Well, David Green was on. I was talking about Microsoft calls.
Yeah.
I ended up getting into some Apple calls, which were kind of similar to the Microsoft calls, right? Apple and Microsoft often trade together. But you guys can ask Spencer. So yesterday after the close, Microsoft, of course,
This was funny, yeah.
reported earnings. And so the numbers came out right after the close. The stock goes down 4 or 5%. I'm freaking out because I'm like, God, Spencer, like, why'd you let me buy those calls? The stock's down. You know, the market's, we've been in a bear trend in NASDAQ. Why would I buy calls, right? And so I'm freaking out. Finally, the guidance comes out. The stock reverses. Not only does Microsoft stock reverse, but the guidance, it caused the whole futures market to flip. So we went from 1 hour looking like, oh my God, Microsoft's going to open down 5%. Tech's going to look weak. I mean, Barron's even posted an article saying the market's going to be down again tomorrow. Blame Microsoft. And it's like, wait, hold up, guys. Just wait a second. Because the guidance, we've talked about this before, the guidance is really what matters, because it's not what the company has done in the previous quarter. It's what the company is going to do in the following quarter, the quarter after that. So I don't know about you guys, but I was pumped that we ended up getting that strong guidance.
Can I read you this note from Wedbush that came out this morning? This is really interesting. So look, it speaks to a larger conversation, frankly, about earnings, about numbers versus what the stock is doing, like versus the price action. And to be clear, you know, we were watching if you're watching us our channel last night, you were probably watching the Microsoft earnings call because we were streaming it, and they were giving guidance on the call. We were just waiting for it, and they gave their guidance, and the stock ripped higher. And I want you to ignore those random wicks, ignore that. Those aren't real. You want to pay attention to this rally. So
Voodoo. So Voodoo's saying when one stock moves the market is in trouble. I agree, but to be fair with this yesterday, I mean, Microsoft is the first out of the big FANG stocks. Well, I guess what Netflix reported a couple weeks ago. But either way,
Netflix almost doesn't count anymore. No offense.
Netflix almost doesn't count. We're talking about like Microsoft, Apple, you know, those companies. They're all going to respond to whoever the first one of them is to report earnings.
Yeah.
So because Microsoft reported strong earnings and the stock was trading higher after it, all those other stocks are going to follow, which of course we know how weighted those stocks are in the NASDAQ, in the S&P 500. So I don't really see it as like, oh, Microsoft moving the whole market. I just see it as that's the takeaway from this earnings report. That now if Apple, the groundwork has been laid, right? If Apple reports great earnings, I expect the stock to be moving higher.
Voodoo, if you don't like that, then you're going to hate what I'm about to read. This is from a Wedbush note that was published last night after their earnings report. This is from Dan Ives. He's our tech analyst. He covers Microsoft. I'm going to read you just straight from the note. There are some moments in the financial markets that are pivotal and historical when put into context. For example, Diamond's JP Morgan conference calls and hand-holding in the financial crisis during 2008-2009. Last night was one of them, when in a white-knuckle market with the whole street, regardless of what sector you cover, value, growth, where you live in the world, watching Microsoft's earnings with a close eye, Nadella and Co. gave a robust cloud guidance, quote, for the ages that will calm street nerves this morning, and was a bullish data point for Microsoft, and importantly, the whole tech sector moving forward. Now, when I read that, I thought, okay, that may be a little much. That may be a little much. I don't know how meaningful last night's call was in the grand scheme of things, but clearly it was meaningful. But Dan Ives from Wedbush is circling last night as like a moment to remember. Whether he's right, I guess only time will tell. But Voodoo, to your point, that's the mood that's out there, right? These opinions from these analysts, they reverberate, right? They don't happen in a vacuum. So when you consider what Microsoft did during the call, what the whole market did during the call, what the market's doing today, it's not unreasonable to say that the market is up today and it turned during the Microsoft call. Was it a moment to remember in history? Was it cloud guidance for the ages? I don't know. But you can't argue with the price. You can't argue.
I think bottom line is it's not alone the fact that Microsoft reported good earnings that the whole market kind of responded well to that. It's the fact that the implication of it that, hey, look, in this environment, these stocks are still like there's no other stock. We talked about this yesterday, right? Microsoft's PE, it was lower than Costco's. It's like, which one would I rather buy right now, Microsoft or Costco? It's easy, Microsoft. And, all credit, to Bill Gates, Steve Ballmer, of course, but...
No. Steve Ballmer. Steve Ballmer was the CEO from 2000 to 2015 where the stock didn't do jack. All right, so...
Well, I think okay, that's fair. I was going to give credit to Nadella because I feel like his... I don't know if he gets enough credit. Like, I was looking at the chart. He came in 2014, succeeded Ballmer, of course. The stock has just been insane since then. And like you said, Spencer, the stock wasn't doing anything before then. Like, this guy took, at the time, Microsoft in 2014 was kind of seen as like a not dying tech company, but it wasn't seen as what it is today. And that's one of the top 3 technological like leaders in the world, and was able to kind of revitalize the company. And really, I mean, you cannot speak highly enough of Microsoft's move, which I believe was made under Nadella to get into the cloud space with Azure. And it's to the point where Microsoft is really Amazon's only competitor on the cloud space, cloud space.
Yeah. The decisions that were made in like 2014, 2013 around Microsoft, 2015, like let's just pull up a weekly. Let's just pull up a weekly chart on a Microsoft. How far back do you want to go? I mean, the stock did nothing for 15 years. Look at the last 6.
Where was this dude before Microsoft, I wonder?
No, I think he was. I think he's a.
Oh, he was like hired internally from Microsoft?
Yeah, I think so. Yeah.
I think so too.
Satya Nadella is, without question, one of the greatest CEOs we have in American business right now. If you're judging by value created, because Microsoft was a sleeping giant and now they ain't asleep no more. So
yeah, I mean, exactly. That's what I was saying. Like, revitalized, sleeping giant. That's the perfect way to describe it. They were a giant. They were kind of not dying out. I'm not saying they were dying out, but they lost some of their glamour as like a leader in tech, and Nadella helped bring that back. So one of my buddies, dad, one of my best friends that I grew up with, his dad is a like wealth advisor, runs his own group in St. Louis where he at Morgan Stanley, and he's a really good like stock picker. Like, he manages all this money. I don't know exactly how much money is under his groups.
Right, can we get him on the show? Get him on the show.
All right, I'll reach out. I'll see if he's willing to do. I don't know if he's allowed to. Like, I don't know compliance wise, like what he's allowed to do and talk about. Either way, I remember talking to him about stocks in like 2014, 2015. And he gave me some things that he looks for in stocks at the time, and I was like 18, kind of just getting into this. And it's always stuck with me. And at the time, he told me Microsoft, and I think Microsoft was at like $40 at the time. He was like, that's my biggest pick for the next 5 years. And it's just gone up like 500% since then. Wow. But he said the 2 things he looks for: 1, insider buying, or not just insider buying, but when employees at a higher rate than average are taking stock option like as part of their salary instead of just getting paychecks, right? Mm-hmm. I don't know where he gets this information. He somehow gets it, but it makes sense, right? If say the average workforce, 5% of people are taking stock out. If you have a higher than average, what that's telling you is that employees at that company are very bullish the future. They'd rather take the stock options because they think long term that's going to be worth more than it is today. So that kind of insider buying, employees choosing to take stock option is something he looks for. The other thing he looks for is a higher rate of spending than industry average on R&D. And that's what he loved about Microsoft. Microsoft at the time was outspending Apple, Amazon, these other bigger companies in R&D. And again, kind of similarly, that's showing that the company is willing to bet on the company's future, saying, hey, we're going to spend money in our research and development Not on marketing, not on advertising, because that's how we're going to get our product to where it needs to be, or that's how we're going to get our service to where it needs to be. So high spending in R&D and a high percentage of employees taking stock option were two factors that he looks for in a long-term pick.
Who just asked? Who was it? Golden Cross asked about the stock splits. Yeah, Microsoft has done 9, but none in the last 19 years. All their splits were in the 80s and 90s, and there was 1 in 03. So it hasn't been a factor right now. By the way, if you bought 100 shares in Microsoft at the IPO, after all the splits, those 100 shares are now worth. You now have 28. If you've never sold, 28,800 shares after all those splits. It's a lot of shares. But
all right. I also want to talk about Cathie Wood.
Yo, me too. She's going viral again. She does it to herself. I think.
Okay, here's the thing. I'm not going to sit up here and make these hot takes. I'm going to try to see both sides, play middle ground.
Okay.
First thing I will say, so if you guys have not seen, ARK released in its yearly report, I'll pull it up from the deck. Let me try to find it, actually. Let me find it first before I pull it up.
While he's doing that, I'll say this about Cathie Wood. I don't like it when people dance on anyone's grave, right? Not everyone... no one stays right forever. Everyone knows this. And her funds have outperformed dramatically going back to inception. However, when you repeatedly come out and say things that you know are incendiary, when you've gotten crushed in the last 12 months and a lot of people got burned following you in the last 12 months, I think you're kind of asking for it in a way. You know what I mean? I still own a Cathie Wood fund. I've owned ARKW this entire time, all the way up, all the way down, and I like I support them. But when you do say things like Bitcoin to $1 million by the end of the decade, I mean, you're asking for people to just destroy you.
So okay, all right, I have some thoughts here.
Okay, go for it.
First of all. Wait.
And you may have to step because we're getting our next guest is going to be in studio in like a few minutes. So if Aaron has to hop, just don't be surprised if he does that. But just to greet our guest.
Thank you. Okay, so couple thoughts there. First of all, yes, people are dancing on the grave of Cathie Wood. I'm sure many of you guys have seen on Twitter. It was very popular, a graph showing that Burke B has caught up with ARKK. I think it was like since COVID-19 that, Burke B's kind of been on this slow grind up, whereas ARK went up crazy, then came down, and now they're in line, whatever. If you look at ARKK right now, ARKK stock.
Since inception?
Even with, I'm looking at it over the past 5 years.
Wait, can I pull your screen up? Is that allowed?
Yes, but that's my screen that I have up here right now is not the ARKK stock.
Oh, okay.
This is just real quick. You don't really need to be looking at a chart for this. Even considering the stock is now down 50% off its highs. Last February, ARKK was at about 157 a share. Now it's 73 a share. Even with that 50% drop from all-time highs, the return over the past 5 years is 230%. Annualized?
That was my next question. Yes, thank you.
Annualized 40%. If you bought,
that's redonkulous.
40% year over year. If you bought, and that's considering the stock is down 50% from its highs. All right, so ARKK 231% over the last 5 years. What's Burke B's over the last 5 years?
Not 40% a year.
Guess.
If I had to guess Berkshire Hathaway, considering it's a lot of Apple at this point, over the last 5 years, annualized return, I'm going to drop a number. I'm going to say 20%, 25%.
18%.
Oh, I didn't. That was a good guess.
So you're looking at 40% annualized return versus 18, and people are still saying, Burke B's caught up with it. It's depending on the time horizon you're looking at. I'm not saying ARKK is a better buy right now than Burke B. I'm not saying that at all. I'm just saying to try to discredit Cathie Wood now when she's given on the ARKK fund 40% annualized return over the last 5 years is just insane. I mean, show anyone that is trying to criticize Cathie Wood right here, show me your returns of 40% a year over the last 5 years. And with that said, Spencer, like I said, I'm trying to be middle ground, play both sides. There are people, like you mentioned, that went out and bought ARKK at $150 a share and now are sitting on a 50% loss. That sucks. That's not good. That's not what you want if you're managing investments. But I would just, I think a lot of it was out of her control, almost like the popularity of her fund, how popular it got, and it became in itself like a bubble asset. Like people are talking about bubble environments, the stock market being a bubble. I don't buy it. What I do buy is that there are certain assets that are you could classify as bubble assets, and ARKK was definitely one of them. I don't think it is anymore now that it's down 50% off its highs. But and some of the holdings, I mean, I don't love that Zoom is still so heavily weighted in her thing. I do like Zoom's stock here, but I don't know. But yeah, let's get back to why we brought this up. Here's the report from
Let's get back to the original point.
Yeah, back to the original point.
Yeah.
All right. This is crazy. A Bitcoin worth $1 million. I say it's crazy. You say it's crazy, Spencer. I'm sure most people in the chat right now would agree that this is crazy. But let's keep something in mind. Again, I'm playing middle ground. I'm taking both sides. People called Cathie Wood crazy when she threw out an $800 price target for Tesla. At the time, Tesla was $70 a share. Not only did Tesla reach that $800 price target, it like tripled it when taking into account split adjusted. So sure, that maybe that's a case where she just made one of these. What would you call it? Incendiary.
What incendiary?
Incendiary. One of these incendiary calls where she knew that it. Where she knows it's going to be, a hot button topic of investors.
Yeah.
Okay, you could argue the Tesla thing was like a lucky guess or whatever, but she has a track record of making these what seems like these seemingly outlandish price targets and claims that end up being true. Yeah. She called Tesla her price target $3K.
Pre-split 3K. That was pre-split.
Right. So now it is.
It's way past
Tesla.
It's way past that.
What Tesla doing? 8-to-1 stock split? 4-to-1?
5-to-1, I think.
5-to-1. So at $800 a share, $4,000. So I don't know. I mean, hypothetically, is it possible that Bitcoin's worth $1 million by 2030? Sure. Is it possible that Bitcoin's worth $10 by 2030? Sure. I don't know which one is more likely out of those two scenarios.
Yeah, as someone in the chat's pointing out, she's not new at this. So look, it's not her fault that she got wildly popular and everyone poured into her fund. I do believe there is such a thing as strategies becoming too big for their own good. Did ARK become too big for its own good? Maybe. But if you are down with her Tesla call, she was right, and her other calls, she was right. The Bitcoin thing, as crazy as it sounds, it doesn't sound any crazier than Tesla at 3,000 5 years ago, which is what she called. So
that's what I'm saying. I think if you're taking this claim on its own and saying it's crazy and saying she's crazy, you have to bring that up. That's important context that she's done this before, right? She's had these crazy claims that have come out to be true. So I don't know. I mean, I personally I like Cathie Wood.
But that being said, this is crazy. Bitcoin to $1 million is crazy.
It's crazy. Absolutely insane.
Yeah, and I don't know.
Yeah, Jay Rice, so she talks about this. She talks about buying companies at sky high valuations, and her point is that on high growth companies, you're willing to pay for those high valuations because they keep rising, right? You could have looked at Amazon and said, "Oh, this is a crazy valuation back in 2012 or whatever," and then never got in because the PE was 350 or whatever. Like it's like that's been the case with growth stocks for a long time, for the past 15 years, that the valuations have been crazy and they keep rising in value.
Yeah. I'm not gonna live or die with Cathie, just so everyone knows. The ARKW is like 6-7% of my account, and it ain't gonna kill me either way. So just so everyone's clear about that.
I'm actually not. I don't hold any of the ARK holding or ARK funds. I do have some individual names that are also like, I love Unity. I love Roblox right now. I love.
Okay, that's a great segue.
DocuSign.
Is yesterday we added a few more. We added a couple names. I said I solicited ideas for my shopping list. We added Boeing. Unity is also on there. I don't know when to buy this. I don't know if I should just buy it now and forget about it for a little bit.
Nvidia.
Okay. Nvidia is a little bit concerning.
Why?
Only because this ARM deal is falling through. This ARM deal is not going to happen, it sounds like. And that was sort of that was Nvidia buying growth, which there's nothing wrong with buying growth if you pay a reasonable price for it. That's not going to happen now. It seems like. So,
but they saved $40 billion. Flip side, spin zone. That can be thrown into R&D at Nvidia.
Yeah. Yeah, I mean,
see, there's always a spin zone, Spencer.
Yeah, that's true. There's always a spin zone. But anyway, Unity is on the shopping list. I don't know what to do with it here, but Unity is on the shopping list. I'm into the idea. I haven't looked at the numbers. I have not looked at the balance sheet of this company. I haven't even looked at any ratios yet. Let's look at some ratios in Unity right now. Do they even have anything? Whoa, that's a high price to sales ratio. 29. Hey, you know what?
Yeah, but if they
they have revenue. They have revenue.
Okay, there you go. Spin zone. Spin zone. They have revenue. Look at that. And that's the thing. Is like that, we'll talk about these valuations. 29 price of sales is insane. But we could be. I mean, Unity could triple its sales in the next 5 years. Then all of a sudden you're looking at whatever. I mean, it's crazy.
Matt Middlebrooks is asking a great question, a little bit off topic, but a great question. Actually, it's not that off topic. Does Benzinga have any shows or subscriptions for long-term trading, i.e. investing? We don't have any investing-focused shows. Matt,
I'll give it to you right now. Buy Nvidia and hold it.
No, don't listen to him.
This is not investment advice.
But Matt, what we are gonna do going forward is I think probably do like a couple of specials here and there. I think we're gonna do a tax special one day, and we will do some long-term investing themed shows. The thing about the reason why we probably can't do a whole show about it is because once you get like the fundamentals out of the way, the whole idea is like it doesn't change a lot. The whole idea is not to be super active, so there's not a lot once you get through like the intro, and there's not a lot of reason to like do a recurring thing every
oh
week.
My god, Sadat, are you buying Nvidia Leaps? You're a richer man than I, so those got to be expensive.
But we can do some theme shows or some segments going forward on longer term investing. Really all that really means is we're talking like the basics, right? Asset allocation. What does that mean? Diversification. What does that really mean? We can do a show about that. Not a problem. When will Powell make this market red again? So Aaron asked me yesterday. He asked me.
I forgot to do my research on this.
He asked me off the top of my head if I knew what the market typically does while Jerome Powell is speaking, which, by the way, will be in 2 hours, and we're going to be live streaming that. And off the top of my head, I don't have data to support this, but doesn't it usually go higher? I mean, his name is Pump Powell for a reason.
That's what I'm saying. But like the reason I asked that is because like one of my friends was like, "Oh, get ready for like the market to tank when Powell speaks tomorrow." I was like, "What are you talking? Like, what are you basing this off of?"
Because I don't know. I have no idea. So
yeah, Daria, we've done similar stuff like that in the past, but we should definitely revisit that. Do some more value, fundamental segments on the show.
Yeah, that's
right, because a lot of the stuff we do is
it's on the to-do list, Daria.
Is growth. Wait, all right, Sadat, I gotta try to understand this right now.
It's $10,000
but you're looking. Why are you looking at $175 strike price? Isn't Nvidia's at like $250 right now for 2024?
Wait, did he say he's buying puts? He didn't say.
No, he's buying leaps, which are calls. I think.
No.
Long expiration. What does leap stand for?
Oh gosh, I don't even remember anymore. I used to know that, but I don't.
Long-term equity anticipation securities. What?
Thank you.
Where's the P coming from? Anticipation, maybe. Either way, I would look at like I want to look at like $350
I've never bought a leap in my life, so I don't know. I'm not gonna comment.
Yeah, Luke and I were looking at Baba Leaps. How's Baba doing today, by the way? I'm gonna guess 125 a share.
Proton, that's
Oh,
a very,
1.6 down. It's 160. God, this stock fucking sucks.
Proton, that's a good idea too. I find different account types to be like ridiculously confusing. Like the whole what is it? It's like it's not UTM. What am I thinking of?
What are you thinking of? Can you
Someone in chat
describe it?
help me out. It's like UTM, UTMA. Did I get that right? The problem is all these freaking brokerages, they have different names for shit, and it pisses me off. And whatever. Like
What?
yeah, I think it's UTMA is what I'm thinking of.
Hurt Scrambler. What about Asana? I tried to get Spencer to buy in yesterday.
Nah, bro. Yeah,
He said, oh, it's down 8%. I don't like it. It's down 8%, and now it's up. It opened up 8% today. I love Asana here.
Wait, let's pull up a chart of Asana. By the way, Casey Hubris, I think, is coming up in a couple minutes, the CMO from Rocket Mortgage.
Yeah, Spencer, I'm gonna hop for a second. I'm gonna let you bloviate on.
Yeah, you do that. I'm gonna look at Asana real fast. Let's go. Yeah, to Aaron's credit, he did try to get me to buy yesterday, but to go against him now, everything is up. It's not just Asana. Thank you. Yeah, UTMA. Yeah, guys, I don't know about you, but when I first learned about like a sweep account, I was like, what is this? Wait, so it's an account within my account where the cash is, but it's not quote unquote cash. It's a different thing. It's a holding. What? And it goes from one. It's very confusing stuff. I'm not a financial advisor, but I had a hard time wrapping my head around the whole idea of like sweep account and the account within your account. So that's a good idea. We should probably do a show about that. We should do a show where we literally someone who does not have an account, any investment accounts, opens up an account and we walk them through. Yeah, I understand it now, Jay. Thanks. Anyway, yeah, but no, it is confusing to people who don't know. So maybe we should do a show about that. But anyway, it is 12:30 here. Let's take stock of the market. T minus 2 hours until Jerome Powell takes the stage and answers our questions, not our questions. I don't know why I have this up. Let's go to the market here. What do we got? Yeah, look at Microsoft up 5% on the day. That tells you one story, but the internet chart always tells you another. Let's bring up MSFT. This is why I always like to look from the open just to get a feel. All right. I mean, we're holding gains, which I guess is even though we're not at the high of the day, we're holding gains. So that's fine. You shouldn't expect Microsoft to be making new highs every second on a day like today, but holding gains is a good sign. So there's nothing wrong with that. Miss Whitehorse opened up a kids Roth IRA instead of a UTMA. You know what we should do? This is what we're going to do. We're going to have a show with financial advisors, and we're going to get some financial advisors to come on here and explain this stuff to us, especially now because tax season's coming up. We're going to have some people that actually are certified and know what this stuff is, and to come on and explain it to us, because we are not experts, we are not advisors, we're just guys on the internet. So I did not know that, Jay Rice. Merrill Lynch invented the sweep account. Yeah, today I learned. Anyway, back to the market. What do we got here? Everything green, but as always, there are leaders and there are laggards. Today, the laggard is, no surprise, the safety trade with tech on. It means the safety trade is off. Consumer staples, utilities, your laggards for the day. Rotation is the name of this market. I have not changed my stance. I'm still firmly in the chop fest stance. That's how I feel this year is going to go. Choppy. Let's go to the Qs. Chart. Go to the Qs. Chop. That's that. I mean, I'm in the chop camp. I can't not see us I cannot see us making a new all-time high. No, let's rephrase that. I can't see us making. Last year we made what, 70 new all-time highs in the S&P. I can't see us making more than like 10 new all-time highs this year, right? And you know, I'm not saying we're going to stay up there. If we do, we make a new high, we go back down. Make a new high, we go back down. All-time high was made what, November? Maybe we get there again, but I can't see us going too far beyond that. I'm still in the in the camp of Chop Fest. Let's see what Powell says. Do we think the Fed ended the taper? Is the taper over? Are they ready to unwind their balance sheet, or as the word they use now, runoff? Are they ready to do balance sheet runoff? We should do a survey in the chat. Market's saying 5% chance of a rate hike today. What do we think about that? 5% chance of a rate hike today. If that happened, how far down do we go? If the Fed raises rates today, how far down do we go in the Qs? Do we go to 330 in the Qs? If the Fed raises rates today? It would be funny. They won't do it. But if they do, oh man, it would make for an interesting few days. Yeah. All right. So again, we're gonna have Casey Hubris on in a couple of minutes here as the CMO of Rocket Mortgage. He's gonna tell us exactly what the final score of the game will be, so that we can pick the right square, the right square, and win all the money. That's why we're having Casey on the show today. 1 o'clock, Dean Christians. If you guys do, if you're on Twitter and you don't follow SentimenTrader, I'm gonna put their Twitter up right now. You really should. They do tremendous stock market research, like really good stuff, and they're putting free stuff on their Twitter all the time. Hold on, let me go to their Twitter page. There we go. At SentimenTrader, Dean Christians is an analyst for them. He'll be on the show at 1 o'clock. They do some really, really good analysis. Not even joking. Like, they got a lot of followers for a reason. Great follow on Twitter. He'll have some charts for us, I'm sure. They do really good stuff. So that'll be at 1 o'clock. We're going to have Jason Kaylor on at 1:45 or 1:40-ish to hang out and tell us what trades he's made today. So let's it's funny. You guys are funny. Let's go back to, you know what we should do? We haven't done yet today is we have not done a crypto update. Let's get the heat map up on the screen. And let's do our very first crypto update of the day real quick before we bring on Casey. I just looked at the heat map for the first time all day, so I didn't know what to expect. But there it is. Mostly green. What's going on with Terra? Terra's it's had a rough go of it this week. Down 3.86%. Again, this is a rolling 24-hour chart table. Come on. Atom or Cosmos, whatever you want to call that, is your biggest loser among the largest coins today, down 6.7%. ETH. Can we get to 3K? Get back to 3K in ETH for whatever reason? Maybe because that's like that's not even where I bought it. I don't even know where I bought ETH, but 3K to me just seems like very important. I don't know why. Maybe it's all in my head. 38,000 in Bitcoin. We're holding that level, so nice to see. If you guys missed our interview this morning on Pre-Market Prep with Mark Yusko, check it out. He is a uber Bitcoin bull. I would say a lot of people do not agree with Mark. A lot of people do agree with Mark. A lot of people don't agree with Mark. But I would say this. Mark makes the kind of arguments where even if you don't agree with him, he sounds convincing. Is it just me? Like, there's things he said this morning that I straight up do not agree with, but he just sounds convincing. Maybe because he just says it with such confidence, such gravitas. Mark said that KWeb is his pick of the year, the Chinese internet ETF. He says it with such confidence. Anyway, He's a big Bitcoin bull. He came on the show this morning to reiterate that bullishness. But Bitcoin is up 2.37%. Ethereum up 5.84%. Hey, if you want some free Bitcoin, it's very easy to get it. Very easy to get it. All you got to do is go to the Voyager app, download the app, use the sign-up code ZING when you create an account. Fund your account with at least $100. That's like half my paycheck. And make your first trade. After you're doing so, they will send you $50 in Bitcoin. Check it out. Voyager. Do it or don't do it. That's fine too. Thank you, Pat. I appreciate it. Yeah, he said a lot of things that were interesting. I don't know if Mark is invited back on our show anymore. To be honest with you, he made a crack about Michigan. That got under Joel's skin. Problems for another day. Sorry, I'm just looking at my pro here. We have do not forget about the roadmap, our NFT show. Seriously, I've like gone around the internet looking for like NFT shows. I've gone on Twitter Spaces and I've gone on YouTube and whatever. For my money, the knowledge on the roadmap, our NFT show, which is Tuesday, Wednesday, Thursday, 2 p.m. Eastern after the show, the knowledge on that show is unparalleled when it comes to NFTs. They know their stuff. Chris, Brian, they know their shit. So that'll be after this show. Don't forget about that. I don't know, guys. What else am I missing? I was kind of caught up in doing the List Maker show this morning, so I don't feel like I'm super up on the comings and goings of the market today. I think I see Casey lurking in the background. AB, are we good to go on bringing Casey on here or what? I'm just gonna let AB handle it. AB, when you want to come on, just come on. Easy Mike, why is Boeing down today? He's asking. I just said I really don't know. I really don't know much. Let's go to the chart and let's look at it. This was on my shopping list. It is industrial. Industrial is not a super risk-on asset. Oh, that is interesting. Oh, wait, they had earnings. Duh. See, I didn't even remember. They had earnings out this morning. Oh, see, and this is why I love Pro. I did not even remember that earnings. It says it right there in yellow. Yellow box. Earnings. Oh, boy. All right. Well, Spin Zone, their losses decreased year over year. Not Spin Zone. They're still losing money. $14 billion in sales. They came in $2 billion light on their sales compared to the estimate. All right. That's all you need to know. All right. Let's go to a daily on Boeing. I guess I should be happy here because I'd want it to go lower if I was going to buy it rather than go higher. We talk about pre-COVID levels. Boeing had other stuff going on though. Forget pre-COVID levels. Let's talk about like pre-737 MAX level, right? All-time high. February, March 19, right? 444. How long can it take us to get back there? It's been 3 years already. Investing is hard. I don't know. Wait, there was another issue with the Dreamliner? Seriously? I didn't even read that. I read it so fast. Oh, man. More issues. This is the argument against Boeing. They can't get out of their own way. Duopoly be damned. Ugh. Anyway. What else we got? I'm going to my scanner. Let's see what we got. Anything jump out to me? Aaron, just hop on when Casey's ready. Because I'm not there with you, so I don't know. Let me make a PSA real fast. So some days I come in and I see like, and I always look at the top gainers and top losers. Some days I come in and I see stocks like BBIG that are your top gainers, at least in the pre-market, off of like one trade. It's up 5% today. All right. It's up 5%. It's having a good day. Nothing wrong with being up 5%. Please don't chase meme stocks, especially in the pre-market. If you see a stock that is in a trend like this, pop up 5, 10%, just don't. You can get your face ripped off, okay? There's better trades. There are better places for your money, even if it's for a short-term trade, okay? If you're chasing a stock like Vinco Ventures up, this is an intraday chart. Look, where to get to in the pre-market? What the heck is that? Oh, that was at the close yesterday. This morning, where to get to? 376. That was the high at 8:15 this morning. We're down to 316 right now. Please don't chase these things on the pre-market. Please. Seriously. Or do, but you can get your face ripped off. That's just a PSA. It's not just them, it's any stock that looks like that. Don't chase. Especially in the pre-market. It's stupid. AB, are you back?
What is up, Spencer? I am back.
All right. Do we have our guest here?
We do.
More importantly, can our guest tell us what the final score of the game will be so we can get the winning square?
Ooh, that's a great question.
Thank you.
Yeah, so for all of you guys out there in the audience, I'm about to bring on Casey Hubris, the Chief Marketing Officer of Rocket Mortgage. If you're like me in Detroit, you see Rocket Mortgage all over the place, really anywhere. If you're watching college basketball, watching sports, Rocket Mortgage is all over the place. But the NFL and the Super Bowl is one of probably the biggest event of the year. So let me go ahead and bring Casey on and talk about what Rocket Mortgage is doing with the Super Bowl this year.
Should we give him the special
Casey?
intro?
How's it going?
Good. It's doing great. Good to see you, Aaron. See Spencer. I mean, it's a beautiful day here in downtown Detroit, though. I was just outside. It's about a balmy 5 degrees into here in early January. But we're on our way to the Super Bowl.
I know.
2.5 weeks away.
I'm excited, and like I mentioned, you see Rocket Mortgage everywhere, right? If you're watching ESPN, there are our Sports Center segment sponsored by Rocket Mortgage. You have there's a whole college basketball tournament that's sponsored by Rocket Mortgage, correct?
Mm-hmm. Yeah, I mean, it's we're fortunate, Aaron, is America's largest lender, and we're a big brand, and we're able to do a lot of those unique opportunities and partnerships along the way. As you mentioned, college football, college basketball. We have our Rocket Mortgage Classic, our PGA Tour event here in Detroit, which is a great event, not only for the tour, but certainly for our efforts in our community. And we started a partnership with the NFL 3 years ago, and we kicked off that partnership with the NFL by announcing the Rocket Mortgage Super Bowl Squares. It had never been done before, partnered with the NFL. And we believe in doing things first, best, and only. And here we are, our 3rd year of the Rocket Mortgage Super Bowl Squares, and it's super exciting. It's an opportunity for everyone in America, 18 and up, of course, to sit back, relax. It's, as you mentioned, it's like generally 130 million people in the U.S. watch the game that night. Big fans like myself or like my bride and kids. They can't wait. They're usually checking out around halftime, right after the halftime show, but they're there watching as well. And it's a chance for everyone 18 and up to, have a chance to win $50,000. And we're giving away 2 $500,000, prizes at half and as well at the end of the game. So it's an exciting lead up, but certainly day of the game for Rocket Mortgage and the Rocket Mortgage Super Bowl Squares.
Yeah, and I mean the Super Bowl every year, if you look at the numbers, is the most watched event programming on TV. So I'd imagine, I mean, you mentioned the Rocket Mortgage Classic held here at Detroit Golf Club. I imagine though this is kind of the premier sponsorship of the year.
Yeah, and thanks for mentioning the Rocket Mortgage Classic. Absolutely an amazing event with the PGA Tour, and certainly speaks to and lends itself to a lot of the community efforts that we do. But you're right. The Super Bowl, year in, year out, 100+ million people watch it every year. It's a global audience, and it's an opportunity to be in front of America. Whether you're an advertiser or not, for us, it's the opportunity leading up to the game, but the day of the game. And what's really exciting about you've been playing squares probably since you were a kid, right? I mean, you always remember like going to grandma's house or your family, whatever it might be, and you'd sign up, and the end of the quarter, the half, whatever it might be. We decided, like, why does it have to be like any other squares? Why not every score. So think about it. Every touchdown, field goal, extra point, safety, whatever, drop kick, I don't know, whatever else, how you can score nowadays. You sign up at rocketmortgagesquares.com, you get the box, and if that score hits, you're in the box, we draw that name, and literally within 5 to 10 minutes, you're getting a phone call, making sure you are who you are, but you have a chance, like, congratulations. So literally in the moment of the game, you have the chance to get that phone call. You've won $50,000, and we make a phone call at halftime at the end of the game, giving away $500,000. So over $1 million every game. We've given away $3.5 million so far, and on average, there's generally 14 to 17 scoring changes every game. So think about all those opportunities to have a chance to win.
Yeah, and I mean, Casey, you're dead on. I did grow up. We played squares. I'm sure a lot of people out
legally,
there,
of course,
legally, yeah, in our audience is familiar with the idea of squares. But I love how you guys are doing it. I mean, it's different. You put your own spin on it. You do it differently. You innovate it, and it's a lot bigger, right? So. Just real quick, for maybe some of our audience out there that may not be familiar with the squares game, what are Rocket Mortgage Super Bowl squares, and who can enter? I think you might have mentioned 18 plus, but
super easy. I mean, you just go to rocketmortgagesquares.com. You'll see our television, radio, digital and social ads all over the place. But if you go to rocketmortgagesquares.com, 18 or over, literally, you fill out some information, you pick your square. And the date, so the enrollment ends on the Friday, so that's February 11th. And then Saturday, you get the email with like, hey, Aaron, you picked your square. If you share it, you can earn more squares with a unique code. So you can earn up to 10 more. I just did it myself, and for our team member version of it. And you have the opportunity to get 10 squares, and you get those numbers on Saturday, and then you've got your sheet sitting there Sunday. And, there's your chance. Every score, if you're in that box, we draw a name out of that box to win $50,000, and we pick two $500,000 winners, and phone calls are made, and dreams are made, and lives are changed literally in the middle of the game. And so it really adds excitement, whether the game's super close or it's a blowout. There's a chance to win. You don't have to wait to the end of the quarter, half, or the end of the game.
Yeah, and I mean, I remember it takes me back to the days like playing squares in my grandma's house, like you mentioned, and I was stoked as a kid to win, $5, $6, $10 on these squares.
50 G's.
50 G. What? Yeah. So take us through the prizes one more time.
Yeah.
With the grand prize total, what you can win on kind of some of the smaller prizes. Just a lot of money out there.
Yeah, it is. So again, every score. So 14 to 17 scoring changes. So again, that's field goal, touchdown, extra point, safety, whatever it might be. Every time there's a scoring change, right? The score becomes X and X. Go to that box. There's a winner. So 14 to 17 times. Somebody is winning that $50,000 with the scoring change. And then everybody's got a chance. Everyone that enters has a chance to win one of those two $500,000 prizes that we give one away. One at halftime, one at the end of the game. And, it's a chance to, put that towards your dream home. We work with the GOAT himself, Barry Sanders, that, literally puts your name up in lights when you win. Like, it's super exciting. Then, Barry Sanders has been a great partner of ours, and, he's helping us once again promote this and celebrate the Rocket Mortgage Super Bowl squares.
Yeah, and you mentioned that it's different than normal squares. It's not at the end of every quarter, the half, or the final scores. It's every time the score changes. So if the Super Bowl is anything like the last 2 minutes of that Chiefs-Bills
25, game, I mean, that
in 2 minutes.
Did you? I saw a great meme yesterday, by the way, on Instagram. It said the NFL is announced that they're scrapping the Super Bowl. They're just going to let the Chiefs and the Bills do a best of 7.
Yeah, I'd watch it. I'd watch all 7 of those games.
My heart was like, I didn't have any skin in the game out of those teams, but you always put yourself in the other team's fanatical fans' shoes. Like Kansas City's been there, they've won it. Buffalo's had their heart broken 4 times in the Super Bowl, but then been clamoring to get back since the Jim Kelly days. And wow. But that just shows the excitement of the NFL. I mean, it's just, all last weekend and this weekend with the NFC. And then, we'll have 2 teams heading over to February 13th in LA, by the way. I mean, can you imagine if, Detroit's prodigal quarterback son, Matthew Stafford, gets to the Super Bowl? He's already got 2 playoff wins under his belt. But, I think everyone here in Detroit's rooting for probably the Rams and Matthew Stafford. And, I think it's going to be an exciting game between Mahomes and Mr. Burrows and the Bengals. And
oh my God, I mean, we've got some good football games coming up. I'm stoked about it. But yeah, I mean, that game, you just can't talk about it enough. They were replaying it on NFL Network Monday night, the night after the game, and I was just flipping through a channel, saw it. I happened to click on it like right at the 2-minute warning, so it was perfect time, and it was just hilarious to listen to Tony Romo and Jim Nance while they were speaking. They had no clue what was going to happen,
Right.
obviously. And then when the Chiefs got the ball back initially with like a minute and 50, Romo was like, "Oh, I think this might be too much time for Patrick Mahomes." And you're like, "Oh, well, just wait."
Yeah.
Because even 13 seconds
It's
is
like
too
anything
much.
else. You can't give them that much time. 13. I still don't understand why the Bills didn't squib it and burn 5 seconds.
I know
but-
that. Well, and actually, that was
That's why we're
that was
sitting
one
here.
Of the exactly. That was one of the things that I noticed watching the replay of the game. Right when they kicked it, Tony Romo said, "I don't agree with that. I think they should have squibbed it." And it was like ended up being a great call by Tony Romo. So you guys can see out there watching us, we've got the QR code up. You can scan the QR code. I also put the link in the chat, rocketmortgagesquares.com. Casey, what's your favorite part about working on a campaign like this? I mean, you've worked on some incredible campaigns between the Rocket Mortgage Classic, sponsorship of that. We mentioned the college basketball.
We've done a few
college
Super Bowl,
football,
we've done some Super Bowl commercials, and for something like this, and working with the NFL and launching, we actually brought the idea to the NFL. It's not like they brought it to us and, hey, will you sponsor? We brought the idea to the NFL, and so one of the things that we pride ourselves here at Rocket Mortgage is like first best only, and this certainly lives up to it. And to me, this is something that we work on for months and months, and you see it build, and the excitement and momentum build over the course of the month, and then it's like anything else. Then there's the day. Right? On February 13th is a big day for a lot of brands and marketers and advertisers, and it certainly has been for us in the last few years, being in the game as an advertiser, but also with the Super Bowl Square, Rocket Mortgage Super Bowl Squares. And so to me, it's the excitement of just getting there, and also, knowing that you're doing something fun, unique in the marketplace, and everybody's got a fair chance. It's not for a niche audience, if you will. It's everybody 18 and over can do it, and what an exciting way to give away money and celebrate a great day in America.
Yeah, and that's what I think is so cool about this, right? You took an idea that's old, right? Super Bowl Squares, innovated it, made it newer, made it bigger, brought it to the NFL. Like you said, it's not something the NFL brought to you guys. So this is truly like a baby of Rocket Mortgage that has now grown as this big thing that has hundreds and thousands of people participating.
Millions, actually.
Millions
literally
of people.
millions.
Sorry,
Yeah,
I don't
okay.
want to undercut. No,
Millions.
millions of people participating.
Yeah.
And I can imagine another great part about this campaign is how good it feels when you see some of the people that win use this money toward their improvements.
I'll tell you a great story. Is last year, or maybe it was the year before, we called a gentleman that won the $50,000, and he was at Disney with his kid. He wasn't watching the game.
Oh, wow.
He was doing the thing and watching the whatever, and he gets a phone call from wherever it was, and he picks it up, and can you imagine, you're in that moment with your children and just doing the Disney experience, and because it must have been late, right? It had to have been 8-9 o'clock Eastern time. And he gets the phone call, like $50,000, and it's just when we record the calls, and we have the opportunity to do some storytelling, and it's just in those moments. And there's another one too where we called, and you could tell the gentleman that won was well into his day. You know what I'm saying? And he thought his friends, as we say, hey, did you know? And he thought one of his buddies was messing with him, and then when it clicked that, oh my gosh, this is real, and $50,000. I mean, it was like one of those classic I wish we had a camera on him because he just lost it. But that's what brings a smile to your face, is knowing that we can do this really cool, unique brand partnership. But that you're potentially changing lives and making someone's day or life even better.
Yeah, I mean, that is truly priceless. I'm glad that you're talking about how the logistics of calling someone during the game, because now I know when and if I win.
I got your cell number though, so I might mess with you.
I'll be looking for
you know who else I'm going to call? I'm going to call Jason Raznick.
You should.
Third quarter. Tell you what, third quarter, first score. We'll call Jason Raznick.
Okay.
We'll see what he has to say.
All right. Let me know if you need any help facilitating that. I've got a good star 67 trick.
All right, we'll do it.
But yeah, I mean, I was just going to say, because I'm sure myself, I might be usually less inclined to answer a phone call during the Super Bowl, but now I'm going to be sitting by my phone waiting for that ring all game.
Especially, if you're in that square, right? I mean, you've got your squares, your numbers, the score hits. You've got a one in whatever chance you have to, be getting that phone call. So you already got to know the first part is you have that right score, and then it's, hey, am I the one?
Yeah, Christian Gallagher in the chat from Indianapolis is saying he's buying a house in Florida when he wins this contest. So,
all right.
So good luck.
I know somebody that can help him with their mortgage.
You do?
Yeah.
Who would that be?
Hit me at Casey Hubris.
All right, Casey Hubris,
take care
Rocket
of it.
Mortgage. Casey, great to have you on the show. Great to have you in studio. Look forward to, who knows, maybe we bring you on again after the Super Bowl, talk about What?
Let's
again,
do it.
which one?
Always enjoy.
You have an open invite.
I always enjoy seeing my friends at Benzinga. So
Yeah, don't whatever Raz says, don't listen. You have an open invite here on the show.
we know who
anytime
runs
you
the
want.
place. You
Yeah,
got it.
Exactly. All right, Casey Hubris, Chief Marketing Officer of Rocket Mortgage. Guys, go sign up for the Squares Rocket Mortgage, squares.com. You can use the QR code. You can use the link in the chat. Doesn't matter how you do it. Just do it.
All right. Thanks so much. See you, bud.
Casey, talk to you soon.
Thanks a lot, guys. And all I heard from that interview was whatever Jason Razing says, don't listen to him. That was my biggest.
I did not say that.
You just said that. 30.
Oh no! I said
That was Spencer's takeaway.
that was Spencer's takeaway.
Right. I learned humans only hear what they want to hear.
Selective hearing. Yeah, Spencer's got a bad case of selective.
Yeah. Jason's sitting about 20 feet from us, so we'll make sure that your
No, I was
your
just making
feedback
a joke
was.
because Jason might tell Casey, no, you can't come to the office, you can't come on the show. But I'm telling Casey, this is Spencer, this is our show. Casey has an open invite.
Yeah, he does. I was hoping Casey would be able to give us the final score of the game, but alas, I'll have to wait.
You know what? I'll tell you, it's going to depend who's who's in the game. But I mean, like my prediction, if you will, it's a Kansas City Rams game, and you're probably going to see the over under probably 48-52, and that could be
that Rams Chiefs
34-28, 34-31 kind of game.
What was the Chiefs Rams game a couple years ago?
It's
That
like
was on Monday Night Football.
54,
51.
Yeah, Stafford's. If it's Rams, Stafford's going to.
Yeah, that was with
Cam
Goff.
Akers is back.
The Rams scored 50 points on the Chiefs with Goff. Imagine what they're going to do with no knocking
Big
the
scores.
the
We're going to be giving away a lot. Put it this way, I think we're going to be giving away a lot of money. It's not going to be a 9-3 field goal fest.
All right, well, you heard it here first. Chiefs Rams Super Bowl.
Wait, I have
Sign up for
a last
All right,
question
one last
for
question.
Casey. Casey, since you have influence of the NFL, can we get the NFL to push the Super Bowl back 1 week so it's President's Day weekend, and therefore we have off?
Yeah, that's a great. Actually, the Super Bowl is 1 week later this year than it traditionally is.
I'm only
but
asking
that's
for
more.
1 week.
That's more because of when the NFL added the 17th game, right? So it pushed it back 1 week. But we'll see Roger Goodell here pretty soon, and I'll take your suggestion and throw it in the box.
Well, there's also another option here, Spencer. It's that you keep President's Day weekend, you keep that Monday off, but then you just also add the Monday after the Super Bowl off.
That should be a federal holiday.
Exactly, and then we'll get 2 Mondays in a row off. Raz wouldn't like that, but hey. The NFL, Goodell's got to have some pull in Congress, right? We can make that happen.
Oh yeah.
All right.
Yeah. All right. Thanks a lot, Casey.
See.
All right. Hey, we have our next guest lurking backstage, and I'm as I said, I've been very excited for it. So, we're gonna get Casey on. I'm sorry, gonna get Dean on in a second. Thanks to Casey for joining us. What we're gonna do, not probably. We have to wait till the game is set. But Aaron and I are gonna fill out our squares live on this show at some point in the 2-week run up. We got to figure out when to do that, but we're gonna do our squares live, and you all can do it with us if you want. It's gonna be fun. Yeah. Okay. Let's move on. Let's bring on Dean Christians, an analyst at SentimenTrader. I've been following SentimenTrader for a long time on Twitter. They do some really good stuff. And here's how I know they're good, is because when you see other people that are smarter than you talking about them, that's how you know that they're good, right? I see like other FinTweet accounts that I follow, people like Jake at Econompic, the guys at Ritholtz, right? When they are talking about the data, the research that SentimenTrader puts out, it's high quality stuff. So Dean Christians is an analyst there. Let's bring him on this show right now. I'm going to give Dean the special guest intro. Oh yeah. Dean Christians, welcome to the jungle.
Hey Spencer, how are you doing?
Doing fantastic. How long have you been at SentimenTrader?
So just a little bit over a year now.
Okay, awesome.
Just so your listeners know, I spent 20 years working on the buy side for a institutional money manager. And
for people who don't know, can you explain what the buy side is?
Sure. There's two sides to the business, right? There's the buy side and the sell side. The sell side is big investment banks like JP Morgan, Goldman Sachs. The buy side is typically, independent. Sometimes they're public companies, but firms that manage money for either institutional or retail investors, and those firms may have mutual funds, or it may just be via separately managed accounts. But that's what the buy side is. It's firms that manage money.
And so you were on the buy side for, you said, 20 years.
Yes. Yeah.
And then you made the pivot.
Yeah. Yeah.
Awesome.
So I'd been a subscriber of Jason's years and years ago, and sort of my research sort of aligned with what how Jason researches the market, and I'd like I said, I'd been working for 20 years on the institutional side, and really just kind of wanted to do something different. So I reached out to Jason, and one thing led to another, and here I am today. So
let's talk about some of that research. I mean, like how do you think, like, what is your overall like philosophy, or as far as how you think about the stock market in general?
So I sort of start with the big picture, top down view.
Okay.
Are we in a bullish trend, in a bearish trend, and in a bullish trend, where do you want to be positioned, and in a bearish trend, how do you want to be positioned? Typically, in a bearish trend, cash. And you're just strategically, looking for short opportunities. But in a bearish market, you want to be in cash. You're not going to lose money in cash, except for, obviously the rate of inflation. So start there with the big picture, top down view. And then from there, sort of have a bottom up micro, where do we want to be positioned in terms of sectors?
So top down view of the markets. Are you looking at like the fundamentals of each company? Are you looking at like the what the bond market is saying? Are you looking at signals from the Fed or economic data points, and what the jobs numbers was versus last month, or GDP? Like what kind of signals are you paying attention to, and what do you ignore?
Right. So predominantly price. That's what we're looking at. That's not to say that we don't have models that use economic data, or that use sort of the cross asset, view of the market. Hey, like you said, what is the bond market telling you? What is gold saying? But for the most part, I would say the vast majority of what we're doing is we're looking at price trends and sentiment. For the broad market. And, typically when you say broad market, you mean the S&P 500. Of course, we're going to look at what's going on the NYSE exchange or the NASDAQ exchange, but nobody benchmarks to those. You're traditionally benchmarked to the S&P 500. So we want to have a good fundamental understanding of the price trend for the S&P 500, and what is it telling us? Is the internal trend weakening? Is the internal trend strengthening? Is the index just completely ignoring what's going on with the internal trend, which is what we saw last year. Was we saw episodes of very weak internals, yet it didn't matter because Apple and Amazon and the big guys were going up, and it just didn't matter. So there's a fine balance that you need to have, that you need to understand that yes, the more troops that are participating, typically the stronger the market is, but that's not always the case.
Okay, so I understand people use the S&P because people use the S&P. It's a self-fulfilling prophecy. But how much stock do you put in the idea that at a certain point you have to account for the fact that the S&P 500 is so top-heavy that it, in some respects, is not necessarily a fair representation, a true representation of what's really happening out there? Do you ever have to account for that and reframe that?
Yeah, you do. So again, like I said, we will look at other indexes like the S&P 1500. We have a breadth database for the S&P 1500, for the Russell 2000. We look at the NASDAQ, we look at the New York Stock Exchange, but you have to be really careful, okay? Because a lot of times, the small cap stocks or the NASDAQ, which, if your viewers have, looked at a advanced decline line of the NASDAQ, I mean, it does nothing but go down. Okay. It's got a lot of junk in it. So you have to be really careful about the message that you get from a NASDAQ. Even the NYSE, you have to be somewhat careful because it's got a lot of bond proxies. So, you need to be mindful that, okay, well, if we got an interest rate adjustment that's impacting these bond proxies on the NYSE, it's making the tape look weak. But it's not necessarily, the tape's really not weak when you're looking at just common stocks only. So yes, it's important. And what I've found historically is you really need to see the extreme situation. So like recently, we've been quoted in the Wall Street Journal and we've talked about it, but the percentage of stocks on the NASDAQ in a bear market, and that reaching levels, that you haven't seen since 2000.
Right.
So you got to look at it and say, well, is it really, really extreme compared to history? And if it's not, then you have to give basically the market the benefit of the doubt when you're looking at that trend of the S&P.
Yeah. Dean, you're free to share any charts you have, but I want to bring up a tweet of yours from, what day was this from? It was from Monday. You tweeted for the first time in 3 years, or I guess 4 years now, your composite risk warning model has triggered. More than half the components are now giving a signal. Explain to us what this means.
Yeah. So I have a big trend model that I created that's called the Tactical Composite Trend Model. And this risk warning model is just one component of 7. The Tactical Composite Trend Model has internal and external trend components. And so this is one of the internal trend components. So it's looking at market breadth predominantly. It does have a sentiment component in there, and it's looking for historically weak market breadth when the S&P is hovering near highs. And so this model actually moved to 50% on January the 13th. What we started to see it rise where more and more components were triggering risk-off signals back in late November. It took a little bit of a pause. And then again, in early January, we saw another trigger. That last trigger, by the way, was a divergence in the advanced decline line on the NYSE. And that's what tipped the scales to where this composite risk model went to 50% of its components. If you look 2 months forward, the median return is typically down 5.9% on the S&P. Now, however, if you look at those red dots on the chart, obviously you can see that this thing has triggered 50% or more of the components at some pretty scary times for the market and future returns. Interestingly, that 5.9 drawdown 2 months later was met within literally a week. The market just fell out of bed, and so we fell right through that median drawdown number. But again, what this is just telling you is there's a chance that we're going to have mean reversion against the primary trend. Now, the primary trend is still up. So, like I said, the Tactical Composite Trend Model has a big picture, external price trend component. That is still positive. But this is just telling you, hey, look, be mindful that we could get a counter trend move. Now, one of the other components in the TCTM is a composite recession model. Okay, that composite recession model is at 0. Okay, so what we know here is look, we don't have signs of a recession. Internal trends have weakened. Most likely, it's due to this interest rate adjustment that we've had because the Fed has pivoted. Okay, and that has impacted NYSE exchange breadth data, which the model has more of that in it than it does, say, S&P data. And what we've got here is just a counter trend move. We don't have enough evidence here to say, hey, this is a big bad bear market and a recession is coming. Could that happen a month from now, 2 months, 3 months? Sure, anything's possible. But as it stands right now, look, we've got a counter trend move. We've already had a decent little 10%, 12% if you're saying from peak to trough. And that's what that tweet was. Again, hey, look, a lot of people, you need to understand, we tweet stuff. We're not going to tweet it the same day we're publishing it to our subscribers. It's going to come 2, 3, 4, 5 days later, and we're never going to put the statistics in there. Occasionally we might put one-off statistics in there.
Right.
But for our subscribers, everything has stats behind it that backs up why we published that research.
And before I forget, because we are now T-minus 1 hour until the Fed statement, 2:30 is the press conference, of course. Dean, do you pay attention? Are you a Fed watcher? Are you parsing through the press release and looking at the word change, or are you not about that life?
No, but you know what I do
Thank you.
do is I've gone back in history
Yep.
and basically have a time series for every single Fed meeting going
Oh.
back to the 70s. So what I can do is if the market goes up or down or does this or that, I can go back through history and say, well, when it's done this in the past on a Fed meeting day, or when it's done this 1 day, 2 day, 3 days, or 1 or 2 days after a Fed meeting, can we gather anything that's useful in terms of forward returns for the S&P or whatever market you want to measure? So yeah, I have, what we try to do is avoid a subjective opinion. We want to just take the data in and analyze it and provide evidence-based research to our subscribers.
That brings up a great point. Something that I've struggled with myself when it comes to investing is actually making decisions, because you end up spending weeks turning over an idea in your head. Well, there's this signal and there's that signal, but the seasonality, but the interest rates, but the trend. So many things that could give you analysis paralysis. How do you avoid that?
Well, what we do is we track everything. Okay. So, Jason, Jay Capel, and myself are constantly publishing notes, and we track it. We put forecasts on it. And so, what I can quickly do on the website is just look and see, like, okay, well, look, we just had 10 bullish risk on studies, and I'm not seeing anything that suggests risk off, or vice versa. And, it's a fine balance. What we found here of late is, we're getting a lot of mixed signals. The market's moving very quickly. And sometimes when that happens, it's best to just take a step back, look at the big picture and say, all right, look, let's look at the big picture, what is going on, and then, sort of reassess. One of the things that the team was discussing not too long ago was, look, we had a bunch of risk on, bullish for the market signals trigger there, in late December, and the market reacted and went up a little bit.
Yeah,
right? But then
I was hoping for more, Dean.
Yeah, and then it completely stalled out and started to reverse. So the point I want to make to everybody is, like, look, when you have bullish signals that don't work, that's a tell. The market is telling you something. Okay, it's not right here, and you need to pay attention when that happens. And now it doesn't happen often. Okay, but when it does, you really need to pay attention.
All that being said, Dean, like, what is your general sense of where we're at? Really, actually, let me be more specific. What was your take, and what were your models saying really about the flush on Monday? We had that just wicked bounce and huge reversal after what was a pretty brutal week. And I get it; it's mixed signals. It's very difficult to tell here, especially now because we've rallied for 3 straight days. But, like, what is your overall sense right now?
So I suspect that Monday was the internal low. Okay. So meaning we had capitulation where enough stocks made new lows. And that's whether it's the NASDAQ or the S&P 500.
Mm-hmm.
That's probably going to be an internal low here for weeks and potentially months.
Yeah.
That doesn't mean we can't come back down and undercut that. But when we do, and if we do, we probably will see fewer new lows. Okay. Because that reversal on Monday was so big that a lot of stocks lifted, and so when we come back down, you're probably not going to see as many stocks making new lows. So that's a good thing. That's what we want to see. This downdraft of 10-12% reminds me a lot of Volmageddon. Okay. You had the same thing where you were down about 10, 12% really quickly in a matter of days, right? And then you had a sort of a reversal bottom, and then you lifted for, I don't know, maybe 3 or 4 weeks. Look, it wouldn't surprise me if we didn't do the same here. The Fed probably comes out a little bit less hawkish today. The market continues to rally. And then we have some sort of retest probably, later in the spring or early spring, say March or so. That wouldn't surprise me at all. But like I said, when we have that retest and potential undercut, I suspect we're going to see fewer lows than what we just saw.
And for those who weren't around, what was Volmageddon?
Volmageddon was the January, February 2018 sell-off.
Was that when the XIV blew up? That one
yes,
day?
That is when XIV
that was nuts.
blew up. Yeah, it was. So again, I think from a pattern analysis, from what we've just seen, look, it's fun to look at these analogs, but at the end of the day, we want to be slaves to the tape and what it's saying. But anyway, that looks the pattern here looks a little bit similar to that.
All right.
Whether that plays out, who knows?
All right. Dean Christians is a analyst at SentimenTrader. I put the link to his Twitter and to their site in the chat. Andy, why XIV was an inverse VIX ETN that literally blew up one day, right, Dean?
Yes.
It was like, was it after hours? I don't even remember anymore.
I think it started after hours.
It literally went to zero. Like,
yes,
it blew up.
And the funny thing about XIV, because I used to trade it a bunch, is when I looked at the performance of XIV from the 2009 low to basically, kind of right before it blew up and went away.
Yeah,
it was the 5th best performing instrument in the S&P 500. I can't remember the exact number, but it was the 5th best performing. So you could have just bought volatility in 2009 and not worried about a single stock and had a return of something like 5,000%. I mean, it was crazy. Now it went to zero, you lost everything, but it was a fun instrument to trade.
And literally, it was a market structural dynamics thing that called. That's what happens when you try buy instruments based on volatility. Is things going to happen like that? So you don't know what you're owning, but there are people that watching it that were like totally like, what is going on? This thing is going, and it went to zero in one day. It went from you lost everything. It was pretty crazy. Anyway, Dean Christians, I put the links to his Twitter, to SentimenTrader in the chat. I would highly encourage everyone to give Dean a follow. Check out their service. They do some fantastic research. Dean, it's been a pleasure to have you on. I would love to have you back. Maybe next time we can get a screen share. We can see some of the charts that you've got going. I see the Bloomberg Flex in the background. But have a good rest of your day. I will text you what Jerome Powell says so you don't have to watch it.
Great. Thanks, Spencer. Really appreciate you having me on.
All right. Have a good one.
Cheers.
Okay. I want to do a guess that chart. We haven't done a guess that chart all week. So we're going to do a guess that chart in a little bit. And we're going to have Jessica Kaylor on from Elite Trading to give us some trades. Aaron Breeze lurking in the background. He can come on whenever. I'm figuring out a way to make my chart easier to read so you all can actually guess the chart. So give me one second while I make it a little bit easier for y'all. All right, I think we're ready for a guess that chart segment. So here's the segment. Here's what we're gonna do. I'm gonna throw up a chart of a stock on Benzinga Pro, and you all are going to. Oh, I could just do that. That's a much better idea. All right, I am going to leave the price axis up. That's what. So I'm going to throw up a chart. You're going to guess the ticker in the chat. The first person I see with the correct guess will win some free Benzinga swag. But you only get that if you email us. But you got to win first. So, AB, you want to play guess that chart? I think he's focused. I think he wants to play. You want to play guess that chart? I think you do.
Let's do it,
Yeah,
Spencer.
let's do it. All right. I'm bringing up a chart of a stock, and I've been doing these without the y-axis, but we're going to keep the y-axis up here. And this is going back. We're going back 3 years. We're going back to the start of 2019 on this chart. Boom. There we go. This is a chart of a stock that is real. That is at $104 right now. Do not cheat and try to find quotes. Christian says he hasn't gotten his yet. For real? Holy. All right.
Swag, is he saying?
I guess so. What? Shelly, you definitely got yours. That was like a month ago.
I actually don't know. That one might have been on me.
Can
Shelly's.
we? Oh my gosh! Can we? All right, we need to have a meeting about the swag giveaways after this, clearly, because AMD is incorrect. BX is incorrect.
Wait, I'm trying to think. All right, so we're looking at a stock right now that's at $104. It looks like pre-COVID, this stock was only at what, $80, $70. So it's a stock that's higher than it was pre-COVID.
It's not Unity.
It's not you. It's not any of these big tech stocks, because all the big tech stocks have had big drawdowns.
We have a winner. We do have a winner.
Oh, CVS?
It is CVS. Christian Gallagher.
Okay. All right, well, this is good because he's owed swag anyway.
Well,
so
apparently they all are owed swag. Several people.
No, there are some people out there that have gotten theirs. Jay Rice. I know Jay Rice has gotten his, I believe. Born to be Free finally got his.
Oh, man. All right.
I'm on top of it. I've just been, Christian, Shelly. That's on me. Apologies. Hand up. On me.
Okay.
I'm going to fix this
It
today.
is CVS. That is the chart up on the screen. If you want me to prove it to you, I will get out of the full screen mode. There it is. CVS Health Corporation.
So Spencer, what are we looking for in the FOMC today? Because the rate hikes are already priced in, right? I mean, they're expected.
A rate hike? Yeah, that if we got that today, it would be very shocking. No, what we are expecting is for the Fed to stick to the script that they put out in December, which is we have begun and possibly even finished our taper. Our slowdown of bond buying. We have potentially begun, and I say potentially because I don't know what they're going to say. Obviously, we have potentially begun the runoff of the balance sheet. And now that we're done with the taper, it's time to raise rates. So we expect to raise rates here in the next couple of meetings, but we're going to remain data dependent. The economy has recovered to some extent. We are happy with that. And that's basically what it's going to be. That's my guess.
Yep. And just for everyone out there interested, we will be streaming Jerome Powell speaking on Benzinga's channel. So just hang around after this show. That will start up right at, is he speaking at 2 or 2:30, Spencer?
It's 2:30. Never changes.
But so the minutes come out at 2, and then
no minutes. The statement
comes out at 2.
Yep. And then
he speaks at 2:30.
Yeah, the statement is going to move the market, but the statement is not the interesting part. The press.
So it's like the company. It's like when a company puts out their numbers at right after the market, but then 5:30 is when the guidance is. Similar, right?
It's almost like that.
It's almost like that, right? Like the first thing will move the market, but then what the market really cares about is what comes after that.
Do pray did.
Do I pray? Did you just ask?
No. Dupre is in the chat. Yeah, Dupre. That is exactly what the market is saying. If you look at the, I'll bring it up on my screen. If you go to the CME's Fed Watch tool, the market is saying 88% chance of a rate hike in March. The reason they're saying that is because that's what the Fed has indicated. Now, there is also a 5% chance of a rate hike today, which again would be crazy, but it is within the realm of possibility. Let's not act like it isn't. But let me bring up the CME Fed Watch tool and make it way bigger for you, so we can all read this together. There we go. Share screen. This is what the current Fed Fund futures market is saying.
Okay, Darren in the chat's bringing up a good point. He says we'll get our knee-jerk reaction right at 2 from the algos.
For sure.
If we get a draw down, like if the market goes down right at 2 p.m., I might look at some calls because I have pretty high conviction that when Jerome Powell speaks, market go up. So that's just an idea. I'm throwing it out there. Might be how I personally play the meeting, but I'm not saying anyone else should do that.
If y'all want to have some fun, come watch our live stream, our restreams of like macro of events like this, whether it's like the Fed press conference, and tonight we're going to do Tesla earnings. We're going to stream their conference call. We did Microsoft last night. We'll do Apple tomorrow. Watch the chat. Watch our live chat. It is hilarious. And I'm not deep. I'm not being mean. I'm not like trying to insult anyone or talk down to them, but like, it really is funny. People literally just be like, stock go up. Why not go down? Please go up. They like,
yeah. The chat in the Microsoft last night was awesome because
so funny. It was so funny.
It looked really bad until Amy Hood, the CFO of Microsoft, came on and gave the guidance. And then all of a sudden the stock reversed. And Spencer tried to trick me yesterday because he knew I had calls and he was like, "Oh, the Microsoft went back down after the guidance." It was tough.
Yeah. So FOMC stream today, Tesla stream tonight. People are hilarious.
Wow. What's your take on Tesla's earnings, Spencer? What are you expecting? I mean, Tesla typically beats, and Tesla typically trades higher after earnings.
Well, I don't know that, so I'm going to check the pro because I don't know that what you say is necessarily true. Let's confirm it.
I mean, I think it is.
Let's confirm it. Let's go back to like 20. Let's go all the way back on Tesla. All right, let's go look at the history of Tesla earnings reports. Do they come in above or below estimates? It's mixed, but usually above.
Well, at least more recent history. Look back the last 8 quarters. It's 7 out of 8 have been beats. And what was it last? Elon Musk said he's not joining these calls anymore, right?
Yeah, which makes it way less fun.
I know. It's more fun when you've got Elon on there. Elon was going crazy on Twitter last night with the memes. He was dropping memes like every 3 minutes, it seemed like.
Dude, I told you my hot take for the year, right? Is that by the end of the year he won't be the CEO of Tesla?
Yeah, I think every day it's like looking more and more like that is a possibility.
By the way, I have another hot take that has nothing to do with the stock market, but if we have time today, we can get to it.
Is it related to Barry Bonds?
No, it's got nothing to do with sports or the market in any way, shape, or form. But so what happened? Never mind. We'll get to it.
No. Let's go on. You can't do that. I gotta hear it now.
So we had this show earlier today, this list makers show. We were highlighting all the best alternative investment companies out there, companies that are giving you access to all investments like startups, real estate, etc. And I got a DM from one of our viewers who said that he had invested in a project on this site called that I think it was on WeFunder. I think it was on WeFunder, which is a platform for startups. No, it wasn't, but it's regardless erroneous. He said he invested in an animated feature film, which is what you can do. You can invest in like feature films and help them get made. And he invested in an animated film on the life of David, as in like the Bible David, right? And that got me thinking, and I was like, there needs to be more, like there should be more A-list blockbuster movies about religion. I feel like we can get the origin story of the Ant-Man, but we can't get the origin story of Buddhism.
What's the Mel Gibson one?
The Passion of the Christ.
Yeah, that was a big blockbuster movie.
That was like 20 years ago.
Prince of Egypt.
20 years ago. Why aren't we're always saying that Hollywood's not original. They're always recycling the same stories. Go to the OG story.
Bill Maher had one too.
What? He did?
Yeah.
But anyway, why aren't there more like A-list blockbusters? I want origin stories on King Solomon. I want origin stories on David. I want Buddhism. I want Hinduism. I want all the religions. Give me the origin stories. Make it epic. Give me Lawrence of Arabia, but religion. Give me that stuff. That's what I want. That's my hot take.
Who's this guy walking in front of our camera? All right, Spencer, we've got Jesse coming on, Jesse Kaylor from Elite Trading. We're talking some stocks, back to markets, off of movies, but
I told you it was off topic, but here we go.
It's a hot take. I would imagine that the studios don't want to venture into anything that could be, controversial.
Oh wait, we did get Noah. Patrick is right. We had a Noah. I didn't see Noah. It had Russell Crowe. I didn't see it, so I can't.
The Jim Carrey movie. There you go. There's another one.
No, that doesn't count. Bruce Almighty does not count.
Yeah, Religulous by Bill Maher. It's kind of funny. I don't know. I don't really love that movie. It's like not anything fantastic.
Whatever. I wonder what Jesse thinks of all this.
I don't know. Let's ask Jesse. Jesse's usually got some hot takes.
Yeah, Jesse, do we think there needs to be more like I'm talking like A-list, cream of the crop, epic blockbuster? You have to go to the movies to see it on the big screen.
Yeah, I think the Mel Gibson one is the closest one to what you're talking about. And you're right. That was 20 years ago.
Yeah. Jesse, do you agree with all this, with this hot take?
I don't know. That stuff is a little out of my wheelhouse, but
that's fair.
Investing in movies caught my idea. Caught my mind. I was like, I want to look into that. I'd love to invest in some animated movies and get some good projects going. That would be something I'd be highly
I would imagine that a lot of these studios may have like pitched films that are in some ways like critical of certain things within religions that are then shot down, saying, hey, we don't want to look like we're being critical of anything that would upset people. So I don't know. I mean, it would be hard to do it in a way, and then if you do it in a way that's like endorsing a certain religion, then you're pissing other people.
Well, you did have 8 crazy nights for Hanukkah, or for the Jewish holidays. So you get Adam Sandler giving you some love.
The Jews get the one.
They did make specific like Hanukkah movies on Hallmark and stuff this year.
Referee.
I haven't seen the movie in a long time. Anyway,
all right, so what's great that what's going on right now that I have to go a little off topic that'll go into topic is Houday Nation, baby. And McFoot McPherson. I'm a Cincinnati local, you guys know this, so I'm loving the Bengals rally right now, and I think we could beat Kansas City just like we did at their house or at our house. And what was that score? We won by 3, I think 34-31. So prediction, same score.
I was thinking about people like you, and I was watching the game over the weekend, and I thought, man, it's been hard being a Bengals fan for 20 years, but it's all worth it for last weekend, right?
We've lost twice to San Francisco, and San Francisco's in this right now. They have a chance. And what would be the odds of the Bengals San Francisco 3rd Super Bowl? I think that would be the most hyped Super Bowl in a long time.
Jesse, I don't want to bum you out, but
not
hey, man, I know the Bengals beat the Chiefs a couple weeks ago.
Burrow got sacked 9 times and he still came back and won.
Bengals don't have a shot in hell. Bengals are 2 years away from even being able to think about competing with the Chiefs in the playoffs.
That's a realistic approach.
That's a little bit harsh, I think.
But I think that
come on, don't be waiting on Jesse's parade. Come on.
Yeah,
it's been really.
I'm trying to help him out. I'm trying to like reverse jinx.
AB, I'll take a $10 bet right now that the Bengals will cover the spread of 7 points.
All right, deal.
All right, you guys.
Deal. You're a Cincinnati, Ohio native. I'm a Missouri native. I'll take the Missouri team. What's that?
I said Houday Nation. I'll have the cigar lit when I say with the picture and I'll send it.
I will say Joe Burrow is like the coolest. He might be like the coolest guy to come in the NFL in the past. I don't even know how long.
Joe Cool, man. That's Joe Shiesty.
He's cool. He's just cool. There's no other way to put it. I mean, I knew after I actually was at an LSU game, LSU Rice, because my buddy, who's now the punter for the Lions, played at Rice, and we went down to a Rice LSU game just because we're like, oh, it'll be fun to go to a game at LSU. And Joe Burrow was the starting quarterback for the Tigers at the time. He was not a big name, and he actually, I think it was the year before LSU won the national championship, and in interviews after LSU won, he was like, yeah, that Rice game is where I really gained my confidence. Like, that was my first time throwing for 300 yards, like all this. And I was like, oh, that's so cool. I was there when Joe Burrow became Joe Burrow, according to Joe Burrow.
I love it. I think it's great. Now, going into some stocks, we have DraftKings, which in the pre-market prep, that was my stock of the day. It's the only trade I took today. And I said, you know what? I've been buying on the way down. Now, this is a trade that I can show you that doing it this way can kill your account, averaging down but if you have diversity and you're talking, okay, this was a 10% position that I continued to add to and created a little bit of a larger position, but I was in this thing at 50, right?
Yeah.
Originally. And I got my average down to below 20 before with this last downside that we had. I was buying in the 19s and 20s all day. And then now we go up to the 22 mark is where I got out right around 21.79. I call it 22 to make it easy, but it was like right under 22. And I said, you know what? The way I did this was I kept my original portion, but I sold everything that I bought underneath the price that it's currently at that I was selling it, right? I got rid of all the shares that were profitable, and I held the ones that I was holding at 50.
And you can do that. You just have to tell your broker. You got to be specific about it.
Right.
And
you can do this to protect yourself in a lot of ways. It's obviously you're getting the same shares you wanted to hold at 50 back now here at 21 or 20, and you make a short-term profit that is, depending on your share size, is great. It's a great trade. And then I was just today was just one of those things where I've been wanting them to get at least some type of anything, some life. And I thought we were going to get one into about April. I think April's going to be, I think we're going to be higher than this in April in DraftKings. And that's the kind of play I've been thinking of.
I mean, like I saw the headline about Wynn selling their online sportsbook. And I mean, it is very obvious that the unit economics of this industry are very challenging right now. You have companies like DraftKings and Penn/Barstool and MGM and Caesars, and they are spending out the wazoo to acquire customers. And Aaron Bree is trying to send me a message right now. What is he trying to say? He has to go to the bathroom. Go to the bathroom, man. What do you?
He's got a tinkle.
What are you talking to me for? I don't understand what that was about. No, they're spending out the wazoo to acquire customers, and it's not sustainable for everyone. Wynn is throwing in the towel, clearly, right? But it's a challenging environment. Is the market is the sports betting market going to get larger? Yes, of course it will. But you have a half dozen major players, and it's a freaking dogfight out there. And there's no such thing as brand loyalty. I've got 4 apps on my phone, so right. I can understand both sides. The pie is going to increase. But it's difficult. It really is difficult for these companies to acquire and then to keep customers. And we're so early on. How long has sports betting been legal in the U.S., on a federal level? A couple years? 2 years? It's still so early.
And
right?
I can agree with that. But at this, the flip side where let's just go with the attitude of DraftKings. They are the face of online gaming. When it comes, if you ask 10 people where if they've never bet in their life, if you said, hey, where would you go and bet on football, they'd say DraftKings. I would say majority would say DraftKings, and they would never say Wynn Gaming or any of these other MGM, any of the other apps, like even FanDuel might be the second most likely. But what I mean is that they've really done well with their branding. They're not the same as Penn in my idea of like how they're who's behind them and showcasing them. But the idea behind the idea behind the gambling and the way that they're doing it now is I think that they're going to expand into other ways of gambling, and like they have been, like giving you more to bet on. Going to the casino is much more fun to be able to gamble on the games while you're watching them live in front of you, and you can bet on whether The quarter can be flipped. Whatsoever. Those little things, I think if they keep on adding, they keep on doing it. Now, acquiring customers, I mean, do they potentially get to a point where everyone's downloaded the app and then they've either used it and lost, and then now you've got your regular gamblers? And is there a lot of professional gamblers successful? I mean, what do they, but the advertising money, things like that, I don't know. Well,
okay, I'll just say I mentioned this on Monday, but I was on the DraftKings app on Sunday night. I wanted to see if there's any bets I can make at halftime of that game or whatever. And there's that blackjack pop up, and I always close it out. But Sunday I was like, you know what? Let's play some blackjack, and that was a dangerous thing to do. I don't know. Part of me, like, I don't.
What about video dealer, like live dealer in front of you, and you could see her dealing the cards out in front of you? Would that make you feel more comfortable than? And you're playing with people with like this, me and you, and 4 other guys at a round table with mics. You got video, and you could be in there playing at a casino live.
I don't know. Like, I'm just like, I've always thought that like gambling and sports betting is sort of the one vice that I like, that I know myself well enough to know that I don't, like alcohol enough to like drink a lot, or I don't like drugs enough to,
You're not buying tap?
to do a lot of drugs, but I like gambling. And so I could like, it's a line I have to draw with myself, because I spent 20 minutes last on Sunday night, 10 minutes playing blackjack, whatever. And, it was too much fun. So I like have to like stop myself a little bit, but it was yeah. I don't know where I was going with that story, but the point is, DraftKings, they got me eventually. They got me, right? They tried to get me every time I log into that app. It's, hey, play blackjack. And every time I'm like, no, I don't want to play it.
Well, it's in my blood too. I was born in Vegas, raised on the horse track. Kind of like Joel, I'm a big horse guy. I'm not nearly as educated on the names and the jockeys and how many furlongs they won by, and he knows all the statistics, but I'm a big fan of we have Kentucky Derby right next door here in Ohio. All
right, so besides DraftKings,
BYD, I'm going to transition to them. That's another one. I know it's on the same thing, but this was my feel for this 3-month kind of just a trade, and it happened a lot quicker than I thought on the DraftKings for where my position was. But on board gaming, here's your weekly. It's been in consolidation for weeks, right?
More than that, yeah. I mean,
yeah, for a while, yeah. But you're finally getting some life here from 55 all the way up to 61. So now, are you chasing? In my opinion, yes. So this is where I wouldn't say, hey, go jump into these stocks and go buy them. They're just ideas, this trade ideas of that I've seen that were in favor. And I think as the spring gets here, we get warmer. We have more gambling, more sports betting going out. We've got more people going to the racetracks, things of that nature. These will be back in favor again.
Do you have a level? Do you have a stop? Do you have a target on the upside or the downside? I mean, how are you approaching this?
On board gaming, it was strictly just I took a small 3%, kind of 2%. I think it was like 2.8%, and just bought a small portion. Just said, you know what, I'm just going to look at this in 5 years, and think that it might be better now. In 3 months, that's the way I take the trade. But if I get an alert, because I set alerts that are $10 increments above where I'm at, because a lot of times I'll take that $10 win, and I'm like, you know what, I'll just put that money into something I have more of conviction in. But I'll set the alerts above me at $10 intervals, sometimes 5, and I'll hit that alert. It'll ding my phone and say, hey, this stock hit this level, and at least gives me a chance to look at it and see, should I shave a little bit off? Should I take a little profit off? Even though this was a 10-year plan, what's my 10-year plan? Do I think this company's be over 62? That's the 10-year plan. I think it's to be higher than where I bought now. I don't really know where it's going to be target wise. It's just whether do I think it's going to be higher in the end? Do I think this company is going to succeed and still be here? And the technology behind it, I've done, decent amount of research on board gaming and what they do, and they're like the thing behind the thing. They're the ones that are kind of gaining contracts, and they've done really well throughout the way they're doing their digital, like a software and things of that nature.
Hey, look, you're making a call. It's very difficult to buy on the way down, so you're making the call.
It is. Now, other than that, I mean, the whole market was green, so everyone was waking up happy unless they were not averaging down or buying on that dip, because I think a few people in our Discord, they were saying, yeah, I'm green today, but I had a lot more red before this green over the last month. And I don't like to say, hey, I'm doing great or I'm doing bad. My portfolio is up like 1.9% for the month. So it's a very slow grind, but I'm diverse. I have a lot of different things going on. And I also day trade a few times a day to make sure that I can counteract some of those long-term losses in the long-term portfolio. So you got to take the wins when you can during the day and then try to look for what's moving. The best tool for me is just waking up and looking at what's moving in the market and what do I like? What stocks do I watch? What do I see daily? And look at, like, the one that I've really been looking at a lot that I haven't touched is Amazon. And I can't believe how bad they beat this thing down.
Every time that happens, every time it's like, people, the FANG stocks will get a hit, and then people will wake up out of their stupor and they say, wait. We're talking about Apple here. We're talking about Amazon. We're talking about Microsoft, Google. Do we forget that these companies are worth more than the GDP of many countries for a reason?
Right.
So
2,400 level was a level that I've been watching for Amazon. If it was to ever reach there, I have an alert there. But this pullback, it looks so, especially for the options contract, the calls are just demolished right now for a long. If you bought a December call right now, I know it would be really expensive, but if you bet, this is a bet, if you take a bet and you're like, you know what, I'm going to take an in the money position right here at 2,800 on them and just hope that if they get a 50% rally in the next 5 months of this previous retracement, you just go back up to $3,000. That thing's going to be triple, quadruple, some crazy amount of money. And that's where I hate to say those things because I won't do them 9 times out of 10, but every now and then I'll take a stab. And this one I've been really looking at taking a stab at. And because of the intrinsic value and the extrinsic value, I mean, it is just the implied volatility, things of that nature. It's completely just demolished these contracts. And sometimes you can get some really quick gains. And that's when you look at when they get to oversold territory, they get to the bottom of a lot of your indicators that you use, whatever indicators people are using, and you buy at the right moment, or just buy a share if you have a small account and let it run up a little bit for you. But that's one I've been watching.
What else? If you have any tickers, you have any questions for Jesse, holler at us, drop it in the chat. Jesse can give his take if he has one. Is that X going to give it to you? No, sorry.
I like X a lot for just kind of a long-term play. Short-term LPI, I know there's a lot of haters in the
I don't even know what that is.
Petroleum industry. Laredo Petroleum. It's just whenever I go into the oil sector, I like MRO, Laredo. I'll trade Gush, obviously just for a day or two. You never want to hold it, but this is just another, I'm looking at the gas pump. It's going up again. It's going to be harder to get oil during a war. So that's something I'm putting into my mindset. And obviously I hate to say the word war, but if we get into a extreme discussion with Russia and things of that nature, that's kind of on my mind of what stocks would be affected, like missile defense and nuclear, things of that nature that might be affected. So I've been looking at a lot of different companies that have to do with war, and these ones have been pulling up on a lot of people that I follow. I watch a lot of different YouTube and just Twitters and things like that, and I find these starting to spark up and people talking about these different companies. And they're just ones that I've had written down over the last 2 weeks. And I was watching it today, and over the on the daily chart, looking at how it went from 60 to 73.84. I mean, that's a $14 move. And somebody likes it right now.
Let's do some takers from the chat.
Yeah.
Jonathan asked about BBIG. He asked if you had thoughts on that squeeze. Jonathan, I don't think this was a squeeze. If you're referring to today, I'm not. Well, maybe he's referring to. If you're referring to today, then that wasn't a squeeze. I mean, this is a stock that's in a massive downtrend, and frankly, this company is kind of a joke. I'm just gonna say it. It's kind of a joke. We've had them on our show. They say things, they give timelines, and those timelines do not get stuck to. For whatever reason, people are in love with this stock. Why? Because they're like the next TikTok or something. But I mean, there's a reason the stock is $3, right? There's a reason it's down 75% from its highs. I mean, we've tried to get them back on our show. They won't even come. I mean, they're like not doing any press right now for whatever reason. Sorry, Jonathan. You mean it's going to squeeze? That's what Jonathan is thinking. Anything is possible. Maybe it goes back to 12. I have no idea. I just know that this company is my honest opinion. My opinion of this company is not very high.
So I'll touch a little bit of this because it sounds like, most people that I'm talking to, they look at this are probably new to trading or just haven't done a lot of educational program, just to learn. Like right now, look at the technicals. What do you guys see? Do you see a top here? You see a top here, and you see a top here. So what does that mean? What do I see? I see, okay, it had a squeeze. It ran up for whatever dumb reason, and then it dropped, and it found some type of support, which will become resistance in the future. Some resistance that'll break through and look for a downside move. So I don't care about this one so much, but what I do want to show you is look at the amount. If you're just kind of looking at this as a layman's term, this is your top here, It's about a 50% of this previous move. Well, look what happened again. It came right back up, and look where this resistance that I said will become resistance. Watch, scroll right across, right? Resistance. So now what do you think this one's going to be? Your new resistance after you get some confirmation. So you're going to get a flush through. It's going to come back and it's going to find this mark and it's going to break through, and this stock won't be talked about for a while until something weird happens again.
That's exactly right. It won't be talked about until something weird happens again. I'm sorry if anyone is underwater in this thing, but I mean,
harsh realities.
Buy companies on fundamentals. Don't buy them on hope.
I mean, if you use if you use the products in your company or those are the things that I ask you. I'm like, the very first question I ask them when they go, should I buy this stock? I say, do you use any of their products? Do you already invest in them in some sort of way? If you're an Apple buyer, you buy phones, your whole family has Apple, then maybe that's what my wife, I'm going to set her up an account, and I'm going to start doing some trading with her and teaching her a little more just because I want her to be more financially independent. And I think that she might make some better decisions than I am or than I do.
That's because she's a woman, and women make
different decisions, right? And I said, pick what you, first thing she says is Apple. She's like, I want to buy Apple. I was like, why? She goes, because I have everything Apple.
That's not even a bad reason. That's like the best reason to get your foot in the door.
You're already spending money with them, so you might as well get $1 back, right? If they do make money off of everybody else,
That's what Peter Lynch said. That's literally what Peter Lynch said. Buy what you know. What else? Couple more. I mean,
look at Raz. He's invested a lot of money into different programs, software, and things that you guys use. I'm sure at Benzinga, like the different type of companies that you guys are using as for a daily to get things done. I'm sure there's been some investments in there, even with some of you guys. I'm sure you guys have never even heard of some companies, and then they come help you do something, and you're like, wow, I need to learn more about these companies and like what they do, the thing behind the thing that he always talks about, right?
Yeah, Joe.
Jesse,
sorry, go ahead, Aaron.
I have a quick question, something kind of general about options. I don't know if you are going to be like familiar with this or able to answer it, but if you are, I'm more than willing to learn. Do you ever roll option contracts over? And if so, like when is that something you would look at doing?
Do you mean roll them over as in like you own them, you're in the money, and you want to continue to hold that same option for a longer expiration?
Correct.
Okay, so no. I've never done that. I've always just sold options when they're profitable or at my stop price. I always put in a stop, typically the way I'll trade them, I'll say, okay, I want to buy this at a support level. Let's see where the options trading at this certain time. Just a quick, and if you get a exuberance to the upside, then I'll usually buy that contract or to the downside. If I'm buying a call, I want to look for a downside move and wait for that premium to get driven down to a level that I feel of support, and then I'll buy in, and then I'll usually sell on that next candle up at 20-30%. Now, sometimes I'll let some ride over, a week, but I never hold an option to expiration because I was taught to sell options before buying them. Yeah. And I made a lot of money selling options. So if I feel that I was making more money selling options and buying, that means because they were expiring worthless, I don't want to be a holder of an option till expiration. So I typically will just sell early and buy something further out that's dated, longer at a support level on a longer.
Got it. And we do only have a couple minutes here, but I was just gonna say real quick. The reason why I asked is because I pulled up my Robinhood and I got a pop up about about rolling my options over. So I have this Apple call that I bought yesterday. We can see total return 117%. It's a 167.5 call that expires expires this Friday. But there's this new option here which hasn't been on Robinhood before. Roll this position. So I can look at the same option contract, 167. I can look at any of them. 167.5 for the one that expires next Friday instead of this Friday, and instead of $266, I'd pay the difference between the contract that I hold now, and I'd pay $95 to then buy this contract for next week. I will let you know I had 3 contracts on this Apple one, and I sold 2 of them. So I've scaled out. I sold 2, made my money back, letting this one kind of ride because I just want some skin on the table in case the market absolutely rips when Powell speaks. Then I'll say, okay, at least I held on to one of the calls. But I did sell the majority of this position.
Now, what if you believe that it could rip? Why wouldn't you just buy something that's like next week for a longer expiration, so you're not getting killed by the time decay in the next 2 days? So the theta is going to look at the theta, whatever that theta is. You're guaranteed to lose that at 4 p.m.
On Friday, you're saying?
No, today. You're going to lose that on your contract's going to immediately be worth less. Whatever the theta is, if it's 0.43, you're going to be down 0.43 on that contract tomorrow morning when you wake up, if the stock is completely at 0. Like if it doesn't move at all, if it opens up flat and it hasn't moved up or down, you're going to be down that theta instantly on that contract tomorrow. So
that is smart.
So if it's up $1 and your delta's 50 and your theta's 25, then it has to be up $1.50 to counteract that theta and your delta there. So it's got to.
Oh my God! Look at this. Hold on, just in the last minute, something's going on, right? We see this spike in.
It's 2 o'clock. It's 2 o'clock. The FOMC thing is out.
All right, see you, Jesse.
Oh my gosh!
We're gonna say bye to Jesse and say hi to Jerome.
Hi to Jerome. Well, not yet. Jerome's in a half hour. We say hi to the roadmap. The roadmap is going live. We're talking NFT winter. Brr. I don't know. The Fed statement is just out. Hey, they left rates unchanged. Shocker. Not a shocker. Wait until 2:30. That's when we're going to get the real fireworks. But we got to wrap it up. We're going to redirect to the roadmap, our NFT show. We are going to be streaming the press conference in a half hour, so stay tuned for that right here, youtube.com/Benzinga. We did kick Jesse out. Sorry, Jesse. We
didn't give Jesse a proper goodbye. Thank you, Jesse Kaylor from Elite Trading, for joining us. I'll drop the link to his Discord in the chat. We love having Jesse on. If Jesse's still out there, I don't know who was that. You, Spencer, that just kicked him out without saying.
We gotta go.
That was mean.
Fast
was
market.
mean.
I'm sorry.
That was mean.
No.
That was mean. All right.
Whatever.
They're talking NFTs on the roadmap coming up now. Stay tuned. This stream will automatically redirect you. We'll be back tomorrow, 11:30 a.m. Eastern. Until then, happy trading. Yeah, Jesse, we didn't want to throw you to the curb. We love you.